Awesome. So the ground rules for today's live case study. We're going to be solving this case study, which is increasing the average order value of BlinkIt, Zepto, or Instamart collectively as a team. So think of us as the product team at any of these companies, which has been given the task of solving this problem. I shall play the role of giving certain perspectives at certain points, but more often than not, I will start by initiating questions. And I'd like for you folks to actively participate, share your perspectives. Now, given that this is going to be a full end-to-end case, it's going to take time. Therefore, we will have to do a certain degree of time boxing. That is, I will open up the floor for questions, maybe time box it for about a minute or two for participants to share their perspectives, post which I will debate a little around it, and then I will share my point of view. So we'll keep doing this for every stage of the journey. That way, it's a good bi-directional conversation. You're also thinking, I'm also thinking, and we can discuss, debate, and find out new ways of solving this problem, right? This is going to be, again, available as a recording, so you can always go back in time and refer to it. What will help you during the course is, please do feel free to take notes, take screenshots, and I'll actively suggest as well what parts of the conversation that you should take screenshots so that you can use it for the thinking process, because there could be situations during the course of the slide where information is present in 2 to 3 different slides, and it may necessitate for you to be looking at all of these 2 to 3 different points together to make a decision, right? So with that context, feel free to take screenshots, feel free to take notes. I will also emphasize where you should be doing these activities. That way I will take a pause and say, hey, now look at all of these data sets and tell me what you think about it, right? So with these ground rules set, let's get started. But before getting started again, once again, a very warm welcome to all of you. Really, really happy to see 100 odd people investing time on a Saturday to improve their product craft. It means a lot to me as well. You're also giving me an opportunity to improve my product craft, because I'm pretty sure a lot of you will be asking very hard questions for which I may not have the answers. So looking forward to that challenge as well. But before we get started, is there any question that I should be answering? Feel free to ask, opening up the floor for about a minute or two. And once we answer those questions, we'll get started with the session. Any questions at all? If there are no direct messages, okay, there is a message. All right, you're saying it's good to go. Lovely. Let's get started. So just a quick introduction about myself, not spend more than a minute. For those of you who already know me, great. For those of you who have not had a chance to meet me yet or attend any of my previous sessions, a quick overview about my story. Till about last year, I was heading products at Myntra, specifically driving growth, the storefront platform capabilities, and 2 new business initiatives, social commerce and fast fashion. Prior to that, I've been trying to dabble in the startup world, tried building an AI wellness coach, because wellness is an area that I'm particularly passionate about. Those of you who probably see my YouTube videos, I keep emphasizing a lot about physical health and mental health.
Do you want to build a snowman?
Praveen, please, a humble request, please do mute yourself. Prior to that, again, tried another startup experiment where we were trying to build the AWS of workspaces. Our thesis was that eventually everybody was going to work remotely, and we wanted to build real estate which was elastic in nature, which allowed practically freelancers to small companies to large companies manage their real estate and work from any part of the world without fixed costs being a pain. Prior to that, I was the head of products and growth at Freecharge, joined them when they were doing 10,000 transactions. And as part of the growth team, we scaled it up to 1 million transactions in 18 months. So that was a place where I did a lot of my product learning. Prior to that, I was at Zynga as a product manager. A lot of my foundational thinking in terms of being data-driven, structuring problems, being obsessively curious about getting to the root of problems actually started with Zynga. And the reason why that was very near and dear to me was, prior to that, if you notice, I tried doing a couple of startups and had miserably failed. 3 times back to back. And that's when I felt that, I really didn't have the right bearings to build good products. And I needed to go to a place where I could learn that. So that's a brief about my story. Now, coming to the root of the problem statement. Our goal as a product team today is to increase the average order value of BlinkIt or Zepto or Instamart. Now, the question is, where do we even start this problem statement from? How do we start this? Feel free to unmute, raise your hand. That'll be probably the best mechanic for me to then say, hey, please unmute and speak. All right, we have Ritvik. Ritvik, how do you think we should start?
Hello. Yeah, so I think we need to define what average order value is. Like there could be multiple explanation or like multiple definition of average order value, what the stakeholders that we are thinking and what the top brass of the company that is thinking.
Fantastic point. Fantastic point. All right. What else do we have as questions or point of views? Where should we start?
Hey Deepak, so I think like first we need to understand like why we are doing this, like why do we need to increase average order value, and
Okay.
sort of understand the context behind it and how it's going to improve the business, and then we go about it.
Alrighty. So we've got 2 points of views. We've got one which talks about how do we define it. Then there's another point of view saying why do it in the first place? How do we connect it to some context of the business? Great. Ekta.
Why is it
Who are the users that we are solving for, and what are the jobs to be done that we would be solving for those?
Got it. Got it. Okay. That's Ekta's point of view. So Ekta says, who are we solving this for and why should we solve for them? I see.
Why is it a product problem to solve?
Okay, sorry, I'm not sure who spoke right now. It'll be really great if you can raise your hand. That way I can just see the queue and then I can ask you to unmute. Otherwise, it just becomes a little difficult to moderate and understand who's speaking. Sorry about that. So who's spoke, please continue, but just call out your name and tell who you are so that I can get to know where to pay attention.
Hi, Akshay. I'm Akshay. I'm saying why is it a product problem to solve?
Great point. Why is this a product problem to solve?
Yeah.
Awesome. Lovely. I see Vinayak. I think you had your hand raised for a long time. Vinayak, what's your point of view here?
Yeah, I think a bunch of folks already covered this, but just wanted to see if it is aligning to the user behavior and whether the timing is right to solve this right now, or does it have any other adverse effects that could, not be good for the business. Yeah.
Beautiful. So I think there are a lot of interesting perspectives. All of these are right. And therefore, we'll be trying to cover each of these in some parts of these conversations. So this is how I chose to start. The first was, for the sake of this particular case study, I am choosing BlinkIt over Instamart and Zepto for only one reason. There's a lot of public market data available, which makes this conversation a lot more easier. Otherwise, we're going to be doing a lot of assumptions, and that may not be very, very helpful for a good, meaningful case study. So for the sake of simplicity, we're going to use BlinkIt as our primary company of concern. Now, with that, the very first question that I actually tend to ask whenever I hear of a problem statement is, who's the originator of this problem statement? And I think one of you asked in a similar vein. It's not to say that the other questions aren't important, such as what is the definition of the problem statement or definition of average order value, or who are you solving this for? All of these are definitely important. But the reason why I specifically choose to understand the originator of this problem statement is it gives me a sense of bearing as to how to think about certain things downstream. So with that said, who do you think came up with this problem statement? Who originated this problem statement to us? Feel free to raise your hand. Again, I see Ekta. Ekta, who do you think gave us this problem?
Sorry, I think that was a wrong hand raise.
No worries. No worries.
But it's basically like any of the revenue functions could be all the way, right from your executive team onwards to the revenue function. Could be, in terms of looking at our LTV and the cost to serve. So it could also be driven by a collaboration between the operational teams. That's basically finding it hard to quantify the amount of money that we spend on delivery. So it could be a collaboration between those, and then figuring out that this is the business problem that we need to anchor around.
Got it. Beautiful. All right. I see Monty, if I'm pronouncing your name correctly. I see your hand raised. What's your point of view? Who do you think originates this problem?
Yeah, I think, apart from revenue function, I definitely feel that the finance function, a CFO or somebody would have definitely initiated this conversation. Hey, how can we take the company to more profitability? And obviously, increasing revenue, increasing AOV is an important cog in that wheel.
Got it. Snehal, I'll take your question last, and then I'll move on to sharing my point of view here.
Hey, thank you. Thanks, Deepak. Snehal here. So primarily, I think it's from the business side, because especially in the quick commerce segment, and we have so many players coming in. It's very important to have a higher order value so that we can increase our profitability share, right? Because there's delivery angle and the logistic costs, the dark stores, all of this add up to the fixed and the variable cost. So in order to stay profitable, we need a higher order value.
Got it. Awesome. Cool. So here's my perspective. If I was to structure first the ecosystem, right? You have a marketplace business, which is your BlinkIt. You have your customers who are placing orders through the marketplace. And there are dark stores, which are largely franchises run in collaboration with BlinkIt. And you have delivery partners who help in the fulfillment. So this is the ecosystem in which this problem is emanating from. And I think a few of you had absolutely hit the nail on the head. This problem statement is coming in from the business. It's not coming in from the customers. The reason why I'm specifically highlighting, so a lot of folks probably who are already well nuanced into the world of product management and has probably seen a couple of years building products, are able to identify and distinguish, as you've rightly said, in terms of why this is actually a problem originating from the business world. But typically what I've also seen is a lot of young PMs, because there's also this huge narrative that you have to be customer-centric. Almost every problem by default is framed as a customer problem without really understanding, is it really a customer problem or is it really a business problem? So if I was to put it in a very light words, no customer ever came and told us, please, I want to spend more on your platform, take my money. It's only businesses that say we need to increase the average order value. No customer has ever come and therefore said, hey, I want to be loyal to you, or figure out more ways in which you can take money from me, right? If you have a need, you as a platform, if it can fulfill, then yes. But there are certain types of problems which largely also emanate from the world of business, where there could be growth issues, there could be profitability issues, there could be other nuances, which necessitate that we need to understand who the real originator of the problem is and what is the lens from which they look at, so that we can structure the problem correctly and also understand the right definitions for attacking this problem statement. I see BlinkIt having his hand raised.
Sorry for interrupting. I just have a point to make here. So this problem statement that you have mentioned, right, of increasing an AOV for BlinkIt, this is rather an outcome. So we should now first focus on what is the root cause, right, as you said. And this root cause, although it has come in from the business, but it can also come in from our customers who will word it differently. They might say, hey, I'm not able to find this category of products on your website or on your app. And that is another way to increase the AOV.
Most definitely. But we need a origination point to start looking at. It's not to say that we will not transform a business problem into a consumer problem. It's rather to say, why is it coming up at this point of time? How should we look at it? And eventually, all business problems have to be translated to the real stakeholders involved in it so that we can come up with good structural solves. Otherwise, we may not come up with the right root causes, as you rightly said. So we'll be going through those nuances as we progress through the case. But the reason why I was specifically highlighting is if there are, let's say, very early career PMs who are part of these conversations, or folks who felt that, hey, this could be a customer problem, this is to help bring in that dimensionality to say that this is a problem that starts from the world of business, because no customer ever had come and asked specifically saying, I want to increase average order value. But as you said, Viniket, there could be instances as a consequence with the average order value is not reflecting for certain customer needs not being met. Cool. With that said, we now are going to ask the question again. How do we increase the average order value for BlinkIt? Now, typically, when I try to look at these kind of meta business problems, I try to understand why do businesses do what they do. This is a little bit of philosophy and theory as well. Any business's primary goal to exist is to grow, and it's to grow in the direction of the vision, thereby fulfilling certain needs or unmet needs for a set of users in a given market. And or I use or also liberally here because many companies may not necessarily have a vision-driven approach. They could also be purely driven by shareholders and their returns, and therefore be driving the company towards those kind of outcomes. And usually you see this as revenue growth, or you see this as your earnings and earnings per share growth. When your earnings per share increase, you would see, for example, that the stock prices increase, and therefore shareholders are very happy. The reason why that's important is that brings in capital into the organization for the organization to continue to grow. Some of you may notice that in recent times, for example, NVIDIA's stock is probably as high, if not more than Apple. Now, the interesting part is NVIDIA is probably generating only about $60 billion in revenue, whereas Apple generates close to about $300 billion in revenue. The difference is the fact that NVIDIA is growing at an incredible clip in terms of its revenue growth rate, and it's also able to capture a significant portion of its value, increasing its EPS. And all of this makes shareholders feel very, very happy. So this is a case of a company where they have a very clear vision as well, which they're going to, but they're also trying to improve their relationship with shareholders, which gives in more capital infusion to the organization, which allows investments to build product capabilities, hiring talent, building infrastructure, etc., to grow the business at a faster rate. So this is the primordial reasons why business exists. And it's from that lens that most businesses try to attack any kind of business problem statement. Now, with that lens, the question is, why is this problem raised at this point of time? Why is AOV as a problem arising? So we know that businesses have to grow, and there has to be value capture, etc. What could possibly create a condition where people have to worry about AOV as a problem statement? Because we would have seen historically, a lot of startups especially have always said, grow at all costs. Let's not worry about anything. Like as long as you keep your user growth growing, as long as your gross merchandise value or your gross transaction value or your gross processing value keeps growing, it means that you're on the right track. Why then is the gear shifting today? Why is the focus coming into average order value? It's while it does contribute towards revenue, it's not like the biggest driver per se, at least at this point of time. Why should any company care about AOV at this point of time? All right, we have Tejas.
Yeah, coming from a BlinkIt's perspective, they are saying we deliver goods at minimum of 10 minutes. So because of that, we need the number of dark stores to be within 2 kilometers of the user. But when we as we increase the number of dark stores, the fixed cost gets increased radically. To compensate for that, I think AOV is being talked upon.
Fair point, absolutely valid. But why should they be worried about fixed costs at this point in time? BlinkIt is probably a very, very tiny company early in its life cycle. It's got a lot of, fanfare from the market, growing rather aggressively. Why should it over-index on costs and not focus only obsessively on growth?
I think they're trying to make profitability as their main goal.
Why? Why should anyone care about profitability right now? Malar, I see your hand. Sorry, Tejas, I thought you had completed. If not, share your point of view, and then I'd like to hear others as well.
Sure. My point of view is from the delivery side of the aspects. Like for a delivery person to handle one delivery, it might take 8 minutes to 10 minutes per day. They can deliver around 100 to 200 deliveries, and the BlinkIt is paying around 40 to 40 rupees per order or per day, and making all these calculations, I think the profitability was decreasing as they increase the number of dark stores.
Definitely a valid reason. The larger question then is, why should anyone care about profitability right now? I mean, it's not to say that companies should not care about profitability. To give a perspective, Amazon for the longest period, for probably about 17 to 18 odd years, had no profitability to show. So there are instances of that. There are other companies out there as well which aren't showing profitability. Why should this company care about profitability, or why should anyone care about profitability right now? Why can't we over-index on growth?
One reason could be the IPO. Generally, they want to show profitability during that.
So Zomato is already a public company. And BlinkIt is a part of that.
Right.
So why should a public company right now be worried about this?
Deepak, can I try?
Yeah, go for it, Vivek.
Okay, so I think it's about competition, because earlier the competition is much lesser, and to capture the market only there are one or two competitors out there. But now happens with the advance of technology, there are multiple competitors who are
Sorry, there's somebody else who's speaking in the background. Please mute yourself. It's unfair to Ritvik when he's trying to speak.
Mohit, can you please? Yeah, thank you. So yeah, competition is one of the core things that come to my mind. So with the advent of technology, it's now possible to capture the market by multiple companies. So in the long run, if you don't increase the AOV, you can't capture a bigger market than the others.
That's a point of view. But would you not be able to capture the market by sheerly acquiring more users, getting them to transact more, and just grow incredibly fast? Why AOV? Why profitability?
So like the way you mentioned it, it's a cycle, like the more AOV you have, the more chances you have to cater to capital investment heavy, and the more you grow faster it. Like you can grow faster it by acquiring users, but in the long run, it won't be fruitful. No? You will be actually making loss-making company, but going in a very faster way. That's how many startups and many unicorns fail that way.
Okay, it's a fair point. It's a fair point, but we'll have to first then look at to what extent can AOV play this game. So we'll look into that point of view.
Can I add?
Yes. I'm sorry, I don't know who's speaking.
Vishal
Yes.
Here. So
Vishal.
one perspective can be the SOM defined by the team or the company would be, they would have reached it, right? Serviceable, obtainable market, and the target segment they have defined, and they could see the potential that these are our power users, definitely will not grow much of the user base, and there is a potential to divert their other spends, let's say from Amazon or other platforms, to the quick commerce, or let's say from DMart, right? So there is a potential to divert those sales to our platform, and that is why we should focus on this SOM and this problem statement.
Got it. Okay, all right. So let's then go one step forward and see actually what could be influencing, or rather the narratives that are being said out there, and actually see if it fits in with what you folks are saying as perspectives, right? So my take on this is, again, going largely with the narratives which have been put out there in the media. I think the biggest question that has been asked is, can quick commerce ever make profits? And the reason why profitability today suddenly has become a lot more important, not just for quick commerce as companies, but for generally any startup out there, is the cost of capital has become incredibly high. Be it for India, be it for the global markets. People today, the era of zero interest rates, where the money was given out practically for free, which means you're looking for newer opportunities where your money could be put in, has reduced, which means today the returns that are expected from capital are a lot higher. This has been, an offset from the time COVID has happened, which has made investors a lot more wary. And given that quick commerce is theoretically one of those businesses where it seems to be incredibly costly, and there is no global proof yet of quick commerce ever turning profitable, The pressures therefore come to Indian companies, especially say a BlinkIt or an Instamart or a Zepto, that can they have proof in the pudding that it is ever profitable? So I think a few of you had mentioned that. So you're absolutely right that the reason why people are questioning AOV as metrics and probably a few other metrics such as a contribution margin, gross margins, etc., all stem from the world of profitability. And the reason why profitability is a pressure is because capital availability is reducing, which means you need to be a lot more self-reliant. And that only means that if you're able to capture value back and pump it back into your business, you can be a slightly more self-sustaining business. And therefore, investors feel more confident of putting money in that direction. It's not to say that you need to show a high degree of profitability, but there needs to be some evidence of profitability to show that your business model actually has product market fit. Now, usually, more often than not, people say that product market fit is people buying your product. To me, actually, it needs to go one level deeper. You need to have the ability to capture value back from your customers, because that's the only proof in the pudding that not only are you able to deliver value, but you're able to capture value and you're able to use that value to grow your business sustainably over a period of time. So all of these questions intrinsically make companies and businesses ask, what are possible metrics, which are outcome metrics, which are indicators of us having great product market fit and therefore proof in the pudding in the form of profitability. Now, with that, I think the most important question then comes, where does AOV fit in the big picture? So a lot of you had certain perspectives that AOV does X, Y, Z, AOV does, it moves a certain other output metric. If we were to map it out, I'd like for you to take a stab at saying, how would we structure this problem so that we can eventually understand where does AOV fit into BlinkIt's larger KPI tree?
Hey Deepak, before trying to solve this particular slide, I would like to understand the very basic and core problem that if increasing the AOV is increasing AOV correlated to increase a percent share in the profit. I mean, I don't know. I mean, I haven't seen the data of say for example, an average order value in BlinkIt is around $250. So how much is BlinkIt making from it, irrespective of the delivery charges and also if my order value is just $250? So how how is the percentage share, and that way how is increasing the AOV is going to be beneficial for me?
That's a fantastic question, and that's precisely the reason why we need to understand where AOV fits into this whole, because this is a narrative, right? So again, we're starting from the point of view that the management team has said to us, profitability is an issue, therefore you should attack AOV. But we need to understand, first and foremost, okay, if that's true, and if this narrative is what you're selling to us, how does this fit into this grand scheme of picture? How does it contribute towards profitability? What are the other metrics it's related? So we need to have some ecosystem of metrics through which we can connect and interpret that, is this narrative making sense or is this just a big lie? So hence, we're trying to start by framing it and asking, where does this fit in and how do we structure this KPI? All right, we have PD.
So it could be number of users, average order frequency, and then order value, which is AOV.
Right. So we'll come into the specificities of AOV. First, let's try to understand where does AOV fit into all of this big picture. See, the narrative thus far is companies have to grow, companies have to be profitable. And that's what, let's say, your investors and your senior leadership is measuring. In that grand scheme of things, where is AOV fitting in? How do we visualize that?
Understood.
I think, Deepak, their business KPI trees will have revenue, users, and profit. And under profit, maybe the AOV will fit.
Got it. So let's say you have a metric to start from, and then you're just bifurcating and breaking it down. What could be a possible good starting point for that metric?
Total GMV on the platform.
Okay, that's a point of view. We can start with total GMV on the platform.
We can have a revenue itself, right? Not the GMV, but the revenue that BlinkIt itself is generating.
Okay, we can start with revenue. All right. Where else could we start with? Account share.
Yeah, I think number of users ordering, and the second could be frequency of users who are ordering from BlinkIt.
Okay, that's also a possible pathway. What else? I'll take probably one or two more, and then I'll share my perspective. I see Hari having his hand raised and Arvind, so I'll probably start with Hari and then I'll take Arvind's question as well.
Yeah, we start with profits. That way, costs don't get excluded in our consideration.
Got it. Okay. Arvind, what's your point of view?
Yeah, similar to what Hari mentioned, I'll start with profits, and profits can be broken down into revenues and my cost. And in revenue, I'll break it down again into AOV cross the number of orders because the number of orders cross AOV gives me the revenue.
Got it. Great. Awesome. Let me then share my perspective here. Now, again, the broader context has been that we have to solve for AOV. And the narrative that's been sold is it helps us improving profitability. So you really want to see the pathway all the way till profitability. So therefore, we're going to reverse engineer the tree all the way from profitability. So in this case, your earnings is what is being shared as your profit metric, right? It's actually a couple of metrics after profitability as well. So the way you typically structure an earnings KPI tree is it's your revenue minus variable costs, minus fixed costs, minus interest, taxes, depreciation, and amortization. This is a fairly standard accounting practice. So we're going to start with earnings because ultimately we're trying to improve the earnings, and that is what gives shareholders confidence because this is a public limited company, right? It's out there. People look at the EPS at the end of every quarter to get a sense of how is the company growing. And in fact, if you've been following Zomato's media narrative as well, I think for the last 3 quarters, they have been able to show that they were probably about minus maybe 100 odd crores, and then they switched it and then became positive 100, then it became 300, and then it became 400 odd in the recent quarters. So all of this is giving confidence to shareholders that the enterprise is able to capture value for the market. So given that's the pivot from which all questions are being framed to us, then we need to understand how does that tree connect back to AOV. So with that, your earnings technically break down to revenue minus variable costs, minus fixed costs, minus ITEA. Now your revenue in turn is going to be a function of how the company chooses to monetize. Now for this purpose, usually a good practice is, especially if it's a public company, there is a lot of annual reports which is being published. So rather than you making assumptions, especially if, let's say, you're interviewing for, say, BlinkIt or any other publicly listed company, rather than making assumptions, if I were a hiring manager, I would always look, has anyone spent actually time going through my annual reports to even get a sense of how we define the structure of our revenue or define some of these metrics? Because that shows the amount of diligence that you're putting in to understand the business, the ecosystem, and the way the business operates. So in this particular case, the revenue is a component of 4 streams. One is the commissions from the marketplace, the delivery fee. Now, this is an amalgamation of a few fees. It's your delivery charges, it's your handling charges, and there are a few other convenience fees, etc. All put together is clubbed together as delivery fees. And then you have your ads revenue. And the others is revenue that comes in for managing warehouses and warehouse-oriented service. Now, keep in mind that BlinkIt, as a business model, does not operate its own stores, but rather run franchisee. So as part of its franchisee model, it also has certain servicing facilities that it provides, for which it collects revenue from its franchise owners, right? Now, your variable costs, again, standard accounting practices, it consists of COGS, which is your cost of goods sold, which is all the material that you buy today, your cauliflower, your milk, etc. You need to put money to buy it from a supplier, so all of that gets accounted under COGS. Delivery costs are your cost of your delivery personnel, and usually you don't account for, let's say, warehousing, etc., because you want to park that under fixed costs. And then packaging, which is involved in putting your orders together, your bags, any other material, etc., because it helps, because you're looking at it at a unit level. So every order, if it was to be considered as a single unit, then all the elements that go into that particular order is what we consider as a variable cost. Your fixed cost, like I said, considers your warehousing, and not just your dark stores, but also your central warehousing. Your costs, say for marketing, etc., gets clubbed under your administrative costs, your talent costs, etc., all get put under your fixed costs. And then you have your interests, taxes, and your amortization and depreciations. Now, with that said, what is the next step? Where do you think we're going to find average order value? So we now know how earnings and revenue are connected. Where do we find, which tree do we go down to find average order value?
Commission.
Okay, all right. Any other suggestions?
Maybe looking into the variable costs.
Okay, why would AOV come under variable costs?
Because average order value, at the end of the day, we would only talk about the profit, right?
Is average order value profits? Is that how we define it?
Oh, so long-term view, average order value, if it keeps increasing, it should respond or replicate in the profits part of the count, right?
It will definitely reflect in the profit, but is it through variable cost is the question.
Optimizing these would reflect is what I was thinking. Would that make sense?
Reflecting is one thing, influencing is another thing, right? So the question I'm trying to ask is, which pathway does it fall under? So in the sense that if you affect it directly, so for example, if you would increase average order value, will it reduce variable cost? It may increase earnings, no doubt about that.
All right. Yeah, I get your point. Yes, I got it. Sure. Thank you.
It will come under the commission. And one more thing, like COGS, do we want to include COGS? Because let's say franchise model or commission model, right, will not be considering what is the cost of goods sold, but only the 10% or whatever the commission I'm getting on that order value.
It's an interesting point. I will try to answer that as we go into this.
Yeah, sure.
Can I take a stab?
Yeah, absolutely. Absolutely.
The COGS and the commission, I feel, would be the two parts that we take, because the different SKUs that composite the COGS, that will affect, let's say, the base cost of the goods that we're selling, and the commission that we're adding on top of it will fix the AOV.
Got it. Cool. With that, let's see what it actually translates to. So again, here, because Zomato is a public company, it's easy for us to actually go and try to understand the definition of what average order value is. So the way it actually structurally breaks down for a company like Zomato is your commission is a function of two components: your total monetary value of orders multiplied by your marketplace commission rate. Now, some of you had specifically mentioned COGS. The reason why it doesn't actually translate as COGS is because you add your margin on top. So therefore, it's not the COGS component, but the actual selling price. Now, another interesting nuance of quick commerce, and not just quick commerce, the retail in general, is different category of products have different pricing rules. For example, MRP as a construct is only applicable to packaged goods. It's not applicable to vegetables, fruits, and produce sold in loose. So the way in which your, therefore, final selling price manifests is not going to be coming in from your COGS, but rather a function of how you choose to price your product in addition to the marketplace commission rates that you have for certain producers. So therefore, your commission is your total monetary value multiplied by a commission rate. Now, interestingly, the way Zomato has chosen to define its gross order value is by summing up the total monetary value of the orders plus total delivery fees plus taxes. That together creates their gross order value. And gross order value, again, can be further broken down into average order value multiplied by the number of orders. So if you therefore look at your average order value pathway, it goes via gross order value, and it is a function of your taxes, your delivery fees, your total monetary value, and therefore it influences the total revenue and therefore touches into your earnings. So that's your composite KPI tree, which connects average order value all the way to revenue and therefore your earnings as well.
Deepak,
Yes.
if I may ask you, can you reiterate why commission is equal to total monetary value of orders into market commission rate?
Right. So if let's say you're selling goods worth 70 rupees, right? You're not the manufacturer, you're a middleman, and you're taking a commission for providing service or selling it to the end customer. So that's your marketplace commission rate. So if you typically look at any consumer product, there is the whole the price of a product as soon as it comes from the warehouse. Then there is the price at which it is sold to a wholesaler. And then there's a price at which it is sold to a distributor. And then the price at which the distributor sells to the retailer. And then the retailer puts his markup and finally sells it. In this particular case, your Q-commerce player operates as a marketplace with franchisees being, inventory owners. But you have companies such as, say, Nestle or a Dabur, which through its distributors and wholesalers sell to these companies, and you then put your markup rate to sell to the market. So therefore, the money that you take from the market for selling the product is your commission rate, and you compute it on top of the total price at which you're selling it. Does that make sense?
Yeah.
Got it. So again, trying to visually represent this, if your average order value goes up, your revenue goes up, and therefore your earnings go up. I think now I'll try to also visually represent this in another format.
Just a
What
one
do you
thing,
have?
Deepak. So in the previous slide, why are we breaking it down further, right? I can have simply the average gross order value, because delivery fee and taxes, right, those would be almost, let's say, variable with respect to what's the average order value. So probably I'll keep it as average gross order value. That would be the last step, and just try to influence the number of average gross order value.
It's a great question, but there is a specific reason why we're trying to break down this problem statement further. Because ultimately, even if you were to try to improve at a gross order value level, you will have to understand the input metrics that you can influence to create the outcome. So to do that, again, the definition of the problem statement we are trying to go after is average order value according to how management has prescribed. Now, we can also debate with them to say, why not we take this as the average gross order value? But in this case, if you're taking this as your absolute revenue, right? It is a sum total of your monetary value, your delivery fee, and your taxes all put together. So from that lens, you want to make it as composite as possible for your evaluation purposes.
Yeah, got it. Maybe just helps to pinpoint what's the area we want to address.
Yes. So again, our focus area is average order value. And therefore, we're trying to understand with the prescribed definition of average order value, where does it fit in with all the other definitions which have been prescribed as well? Because if we don't understand how, let's say, the system has been defined, if we go with our own definitions in an organization, there's a good chance that we may misinterpret the problem statement and end up solving the wrong problem statement. So to operate well within the definitions of the company, we're trying to stick to the definitions and understand how various definitions are interconnected with each other.
Okay, sure. Thanks.
Cool. Now, I think one of you had asked specifically, hey, I don't have a lens of what it actually means at a numerical level. And that's for that reason I've put this slide as well, where, again, these are publicly available numbers which talk about what is the average order value for a quick commerce company and where does that stem in from. So if you typically notice, for an average order value of 568, the income is about 76 rupees from commissions, advertising, and other income, and 15 rupees from your delivery charges. And the cost of fulfillment for that particular order translates to about 70 rupees from a dark store point of view, 60 rupees from the last mile, and 1 rupee from customer acquisition cost. Now, these expenditures, again, this is not following with the accounting principles that Zomato does. This is more of, say, another person's interpretation to calculate contribution margin. But again, it still gives a good reflection of how you're thinking about cost structures. So by increasing order value, what are you doing? You're increasing your gross order value, which is the sum total of your commissions, advertising, other income, thereby increasing revenue, thereby increasing your contribution margin, because as your revenues or gross order value goes up, the net that you stand to make out of it is a lot higher. So there seems to be some merit in us trying to attack the problem of increasing order value. So should we now get to solving or getting into the problem space of increasing AOV? Is that the next logical step? So are we ready? Should we get into the problem space for increasing AOV?
Yes.
Awesome. BlinkIt, you have
Yeah, hi, Deepak. Yeah, just one question before we get into this is, how do we ascertain that increasing the AOV is the best lever to pull to increase profitability? How do we make that
Fantastic.
evaluation?
I'm glad somebody asked the question. So I will therefore say, not just yet.
Okay.
Right? So that's probably the most pertinent question to ask at this point of time. And to give a little bit of context, if let's say this was a kind of question that was being asked in a typical interview case study, now for someone who is an APM or a PM, most hiring managers would not bother if they even asked this question in the first place. But should you be an SPM or a GPM or an AD, any other order of seniority, it would be expected that you take a pause and ask, hey, yes, management has asked me to solve average order value. Okay, I get it that it fits into this large picture. Are you the kind of person that's jumping into trying to understand the problem? Are you still trying to take a step back and understand? Sure, I understand that AOV fits into this picture, but how can I be very sure that this is the real area to focus upon? So if our ultimate goal is to increase revenue, the question is, why should we pick AOV as the lever? Because if you notice, there are a bunch of other metrics or outcome variables that lead up to revenue. You have ads that contribute towards revenue. You have your delivery fees. You have your marketplace commission rate that can be influenced. And then you have your number of orders that can be used to increase revenue. And then you have your average order value as well, which you can finally increase. Why are we fixating on average order value? How do we justify this? What should we do now? It's good that we're asking this question, that is average order value the right metric even to focus on if our end goal is to increase revenue? But how do we justify this? What should be a method we use to understand this?
I think since it's related to number of people, and the more user that you adopt in your product, your AOV can increase. So the increase could be exponential. That's why your delivery fee and ads and other, they don't have that much chance of increasing that much rate.
Okay, all right. That's a very interesting nuance that you raised. We can quickly, so you're saying that AOV can exponentially increase.
Yeah, like the number of user adoption is increases, AOV can be increased. Like there is a possibility, but that possibility is not possible for delivery fee ads and other features.
Okay, all right. That's a point of view. I'm just going to, in the sequence in which I've seen the hands raised. I think I see Himanshu first. So maybe Himanshu, would you like to take a stab?
Yeah, thanks. So I believe average order value is one of the components which I can increase without having an incremental cost. If the same user, there is a certain cost associated with serving them, of the dark store, of the delivery person, and whatever I'm packaging and sending. If I increase the order value, that leads to pure incremental profits, and thus makes a lot of sense. If I were to pick any other item here which comes under revenue, probably I could drop my commission, probably reduce or increase the number of orders. That would come with either incremental marketing cost or hit to the P&L. But average order value seems like one KPI which I can easily influence while ensuring profitability.
Got it. You're saying the effort and the risk associated with increasing average order values, it seems to be a fairly good judgment to play on that.
Yeah, I'm assuming here that I'm not increasing my infrastructure investments. With the same infra that I hold today, I will be serving a larger value to the customer and making larger value for myself.
Okay. Why do you say that your infra will not go up?
No, I'm assuming that the products which I'll add, for example, BlinkIt could today start selling furniture, but for that, a different supply chain would be required, a very different infrastructure capability would be required. But within the realm of grocery, whatever they are doing, if they are able to increase that, it takes only the same cost in one driver going from one dark store to the customer's house.
Okay, all right. That's a point of view. All right. Let's go next with Prabhat.
Paper. So basically, like as we discussed, like AOV is a combination of commission, delivery fee, ads, and others. So now basically we can look into the gross margins per unit. So like we need to see like if the gross margins per unit are most influenced by the commissions, delivery fee, ads, or others. So basically here we can further drill it down to the net margins per unit, and we can keep on looking into the data that if the commissions are is the most important factor in improving the like unit economics at a per unit level. So that is the reason probably in a larger picture, maybe like because since commissions is directly influencing the profitability, so increasing the commissions means indirectly if we keep on increasing the order value at a per unit level. So that is how we can relate AOV to the direct net margins per unit and overall profitability.
Got it. Got it. Understood. Okay, that's a point of view. Anurag, I see you having your hand raised. What's your perspective?
I think so for delivery fees, ads, and everything, we can reach a point of saturation at some point. Beyond that, we can't increase or decrease it because it will directly impact, let's say, the user segment that I'm targeting or the number of orders that are coming via ads. And so this is thing that is saturated, can become saturated at some point of time, which average order value won't.
Got it. Got it. Got it. I hear you. Okay. All right. I will take one more, or rather two more. Harish, and then Sankalp, you can go next after that.
Hey Deepak. So my answer is that at the end of the day, whatever we're looking, the average order value is another form of cross-selling, if I'm not wrong, right? So the ticket size is one matter over there. So which will help us increase the customer's lifetime value, right? In terms of increasing their every time their AOV, right? Which will ultimately reflect on their retention rate, in the longer run, and ultimately it starts reflecting on the profitability, which gives us the which comes back to the main question, whichever you're talking about.
Okay, I could you explain why do you feel that average order value will influence retention?
So every time the ticket size it starts getting more, right, for each customer. They start increasing their number of orders. The amount of revenue that is coming in for the company.
Which is fair, yes. Increasing average order value will increase revenue, but why does it matter for retention? And why do you think, why should we think about retention for this specific problem statement? Our focus is purely on increasing average order value, right?
Yeah,
or
exactly.
questioning the premise of other levers for revenue generation. Absolutely sure that if you were to take a retention lens on revenue, your retained users are going to contribute towards the most amount of revenue, and that comes in by the number of orders, right? But how does that connect to average order value?
So as the ticket size starts getting bigger, so I was just touching upon the entire customer lifetime value. So over there it starts reflecting on the retention rate of the customers.
Okay, so you're hypothesizing that higher average order value could potentially mean stickier customers and therefore long-term improvement in revenue.
Yes, one way of looking at it.
Fair point. Fair point. I buy that. Who would like to go next?
I'd like to go next. So if we break down average order value into further things, right? Like you showed an image before. So that gives us insight into what actually a user is ordering. So maybe on the back end, it also helps with insights over number of orders.
Okay, all right, all right. I'll just take one more and then I'll share how I think about this problem statement.
Can I go ahead?
Yeah, sure. I just don't know who's speaking right now. There's a lot of hands raised.
Yeah, this Sankalp. So
hey, Sankalp, go for it.
Yeah. So commissions, delivery fee, ads, other. I think these are more tactical in nature. I mean, we can all these levers we can play around anytime, and does not give us a strategic advantage. And also, it will have some repercussions. I mean, if we increase the delivery fee, we might see people start dropping off from our platform, and they can go to others. Increasing ads might create a bad experience, and so on for other levers. And I think the number of orders here, it's bit difficult to increase, because there's a user need angle over here. Like there is a certain level of frequency that a user will be ordering, and increasing that might need a lot of psychological interventions.
Got it. Got it. Fantastic. Cool. Now, let me share how I've been thinking about it. Sorry. So the way I've been trying to structure this evaluation is by asking, one, who determines these levers? Second, what is the principles that govern it? Third, by increasing it, does it have any negative second or third order effect? Fourth, what is its current revenue contribution? Fifth, how sensitive is this lever to change? For example, if you were to put 1 unit of effort, does it remain neutral, or does it increase by 1%, or does it go shoot up drastically by, let's say, 10x? And the last is, how do we get a sense of what is the headroom to change? Because ultimately, our goal is to grow revenue. So we're trying to figure out how much space is left, like what is your margin to play around with in order for you to know that, hey, there's still, say, 20% margin, so which means we can keep doing a lot of experiments, build a lot of capabilities? Or is it one where you've practically hit the saturation in terms of change and you do any more and it can have a negative effect on the business? Or you simply can't change the lever anymore than what you thought at this point of time. So with that lens, I'd like for you folks to take a stab at it. Now, this is not a very traditional framework per se. It's a very contextual framework. I felt these were the most important questions I would choose to answer. And I'll try to explain why as well, right? Ultimately, any business's goal is to have ROI, which is say that you put in effort and you get in disproportionate returns, right? And one of the complexities when it comes to building products and changing behaviors and moving numbers is knowing that not everything that you put in as effort results in metrics moving, right? So for folks who have probably been shipping products for a reasonable period of time, you'd realize that it's very hard to move metrics, even so at scale, which is why, say, for example, a company like Microsoft, even if it sees like a 10 bips improvement, sees millions of dollars, right? Whereas a startup quite practically has to move heaven and earth to create changes in order for it to capture value. And as you start scaling, the odds of finding metrics which move become a lot more difficult, right? So with that lens, we need to know that, hey, do we have some sense that irrespective of headroom for change, irrespective of how creative we are as a company, is it likely to change? And which amongst them has the highest likelihood to change? Where, if it changes, can it create the most bang for buck? And if it does, is there any second order effect which will negate the very purpose it has been done by? And who is the actor that I have to influence in this entire journey to create any kind of impact? That's the thinking process behind this set of questions that I'm trying to ask myself to figure out which amongst these revenue leaders is worthy of attacking, and how do I stack rank them? If I was to take a very hard call and say I have to just pick one of them and I have to put my life behind it as a team, which would I pick? And that's the kind of hard questions that I'm trying to ask for myself. Now, given this framework, how would you folks choose to answer it? So let's probably start with the easiest ones, the levers and who it is governed by. Who dictates commission rates? Any answers?
Maybe from business side.
Right? Cool. It's from the business team. How about number of orders? What governs that? Who governs it?
Maybe can you explain difference between determined and governed by?
Right. Determined is the actor involved, and governed is the principle by which it gets changed.
Okay.
So, for example, to explain, commission rate is a rule which the business teams set, whereas let's say number of orders is governed by a customer's behavior. So you see this then in conjunction saying that commission rate is a function of supplier and BlinkIt coming up with an agreement or a contract or a rule on what the commission rate should be. Whereas number of orders, it is being enacted by the customer, and what enacts that is the customer's behavior. So maybe let's skip that for sake of simplicity. I think one of you had very specifically called out the effect in terms of second order and third order effect. So maybe let's take a stab at that. Which amongst these metrics have second order effect or third order negative effects?
Average delivery fee. Let's say if we try to increase it, might decrease the orders or the retention.
Fantastic. All right.
Ads as well.
Advertisements.
Beautiful.
I think
Commission rate.
Fantastic. Fantastic. Yes. So commission rate, definitely, if you were to rise it, it can lead to adverse suppliers feeling that they're being squeezed out a lot more. Ads as well, you increase the real estate in which ads are showing up, you're actually probably creating a negative customer experience, which may reduce conversion rate for the customers as well. Likewise, while you could increase delivery rates, there's a chance that it can also backfire and customers may feel unhappy. Now, these were the easier set of questions. Now, for the case of this case study, let's not worry too much about RevCon. Let's assume that your marketplace commissions account for most of your revenues, followed by delivery fees, and a very tiny contribution comes in from ads. That said, which of these, given that number of orders, average order value, are probably the only two metrics here where everything else is a rule or a contract that is being negotiated, which of them do you think is most sensitive to change, and which of them do you think is least sensitive to change?
I think number of orders are more sensitive to change. Let's see if I increase the discounts or other changes, right? But average order value, it would be difficult to change.
Okay. I believe that someone else earlier told that the inverse, average order value, is going to be easier to change of orders. So let's take a poll. Who amongst you feels number of orders is going to be the most sensitive metric to change? Raise your hands. Right, we have 4, we have 5, we have 7, 8, 9, 10, 11. All right, quite a number of folks favoring number of orders. Okay, all right. How many of you are in favor of believing that average order value is the most sensitive metric to change? Wow, all right. AOV for the win, huh? Super, super, fantastic, fantastic. Now, let's look at some numbers, actual numbers, and see what it actually looks like. So, this is numbers directly from Zomato's annual report. So, I've got numbers right from Q1 FY23 all the way till Q4 FY24. Now, what I'd like for you to do, as I said earlier, take a snapshot of this page, put it onto your worksheet, etc., wherever you're comfortable with. and have a look at these numbers, and then tell me which metric is more sensitive to change. Zomato, very smart company, have probably one of the best PMs on the planet, very smart bunch of designers and engineers. And this is the last 1, 2, 3, 4, 5, 6, 7, 8 quarters worth of data. We're talking literally about 2 years worth of data here. And you can see the trend. You can see the revenue in billions of rupees. You can see the gross order value in billions of rupees. I've also done revenue by GOV, kind of gives a sense of what the take rate is, which is basically your ads revenue, your delivery revenue, and your marketplace commission all clubbed together, how that trends over a period of time. You then have your order in millions over each of these quarters. And then you have your average order value, which is in Indian rupees. So having seen this number, right now, what's your take?
Number of orders is more sensitive to change because it is tripled, and in AOV it's just 20% increase or something.
Got it. Now, for the sake of simpler visualization, what I'm going to do is I will normalize this and I'm going to visualize this as a graph. So now you can see that, your revenue has kind of in 8 quarters has gone up order of magnitude by around, let's say, 4.5x-ish. Your GOV has scaled up by about, say, 3.25-ish. And then you have your orders, which have scaled up by 3x. So if you notice, your orders seem to have one of the greatest effects in terms of influencing growth of revenue over 8 quarters. Whereas it's not to say that AOV doesn't affect, but it has had a marginal effect in terms of improving your revenues. Now, with this...
Deepak, I'm sorry, can I interject here once?
Oh, absolutely, absolutely.
Yeah. So,
I don't know who's speaking, so it would be great if you can just quickly say your name again.
Hi, this is BlinkIt again.
Yes.
Yeah. Hi. In my opinion, I feel that AOV is not the right metric to compare with the total orders, since AOV is more like, which is pertaining to average order, right? Per order.
Yeah.
If you're going to compare it to the number of orders, we should rather look at the average orders per user per day, since it is a grocery kind of a business, or per week. And
this is aggregated to a quarter as well. It's for the same.
But the total number of users will also have shot up, and hence the total orders might have shot up.
Absolutely, but it still wouldn't change the degree to which AOV would have changed, right? Because this is at an order level, right? So it's the same number of users. A user can place 10 orders, a user can place 1 order. But so long as your absolute number of orders are going up, your revenue goes up. And likewise, so long as your average revenue per order is also going up, your revenue goes up. Is it really linked to the number of users? Does the metric tree follow that path?
Okay, I'm going back to the same thought that we were discussing earlier, where we were talking about how do we increase the number of orders per person. That might be trickier to increase.
So that's another problem statement to ask, to say that, hey, should we try increasing the number of orders, right? Both these numbers put together help in increasing your revenue. Now, we're trying to say that, hey, between orders and AOV, which amongst them seem to be more effective? And orders, again, if you were to look at it, is going to be a function of your visits multiplied by your conversion rate. Would that be a fair statement?
I agree, yeah.
Vinny?
Yeah, hello?
Yes,
yeah,
yes.
I agree. So orders again, so that is again a holistic level. If we increase the number of user base, it will eventually increase by itself.
Absolutely. So orders in itself, which is why maybe I should have shared another metric. Your order growth rate is being tallies with your user growth rate, right? So as your number of orders increase, as the number of users increase, the orders also increase. Interestingly, I didn't put that metric, but I'll share that as well. What I noticed was the absolute growth in orders comes from the increase in the monthly transacting users, but the number of orders per user remained fairly static for 8 quarters put together. So it was 10 orders per customer per quarter for almost all 8 quarters. And the reason why your orders actually were going up is because of your monthly transacting users.
Understood. Yeah, that's what I was even suspecting. The number of orders per user would probably follow the same AOV trend, similar trend. It's a flattish one.
Correct. So if you do a one level double click to understand what contributes to order growth, your order growth is going to be a function of average orders per user multiplied by monthly transacting users or daily transacting users. So if your user growth goes up, fairly obvious. So then your actual lever for change is going to be, but we have not gone to that level yet. We're still at the phase of taking a decision between AOV as a metric and orders as a metric. Then we can do the next level and say, okay, what are the factors that contribute towards orders increasing? Or what are the factors that influence AOV increasing?
Got it. Thanks.
I see Ajit and is it Ajit? Yeah, go for it.
Yes. Okay, just an observation from this. It looks like AOV. It is that the AOV is flat, and the revenue is coming from acquiring new users, perhaps. And where it might be interesting to look at AOV is probably company has been focusing on acquiring new customers and increasing revenue out of it. And it would be interesting to look at AOV because you don't have to run, spend on marketing through external channels. AOV is through, you already have them acquired. So that could be an interesting way to look.
But what should we be looking at?
Increasing AOV because, for example, upselling, increasing the order per user.
Which is fair. But, and therein, we have to also know what has BlinkIt been doing for the last 8 quarters. So it's not like, let's say, BlinkIt is not solving for cross-selling, upselling. Those are already initiatives. So if you probably open up the BlinkIt app, on the order checkout page, you will probably saying that, hey, these are items that you can potentially buy, right? That's a fairly standard practice that a lot of retail companies do, cross-selling, to increase the basket size. But this is the best effort despite that, right?
Okay.
Therefore, the question that comes to us is, okay, sure, AOV is not as sensitive, but is that the right way of looking at it? Should we reframe the problem statement, look at it? Is there another way of looking at this problem statement? Like, these are some open questions running in my mind at this point of time, right?
Okay.
As of this moment, it does appear that orders is definitely like if I was to play a hardball game and say that we have to obsessively chase it, and we have limited resources and we have to be supremely focused, I would probably go double click a little more on saying that orders seem to be a slightly more realistic game to change, only because one, again, Zomato / BlinkIt, very, very early years of its existence. Zomato's user base is probably far larger than BlinkIt's at this point in time. Even if you were to do a cross-pollination from Zomato app to BlinkIt, the rate at which you can grow your orders and therefore revenue could be probably easier. If you take a slightly larger step back and say, okay, have we actually captured the entire potential TAM in this market or even SAM in this market? Possibly not. Right? So which means that maybe the headroom for growth is a lot larger. So these are the kind of questions that we should be asking. But as of now, if you were to then take that lens and then compare it with AOV, it seems we have tried a bunch of things in the past, and for some reason, it's not crossing. We have to look at the absolute numbers, right? This is the net gains. Over 8 quarters, the best that we have seen vis-a-vis 2023 seems to be an increase by 17%, right? Or 20%. And there's been even brief periods where it's fallen down as well, and we were able to bring it back. And that could be for a variety of reasons. So this is now an interesting question for us to think about. Should we as a product team go down the orders path, or should we still say, hey, how about we do a little more deep dive into AOV as a problem statement to truly understand that have we understood the problem, have we actually done the right things also? There's a good chance that we may not have done the right things, and therefore we're seeing the results that we're seeing. Or we have done absolutely the best and we have not seen it. I can't conclude right now which of it is true.
Deepak, there's just one point.
Any reason? Sorry.
Sorry, don't know who's...
Just one point, Ajit here. Any reason you're not put profit in this curve?
Because our goal is to increase AOV. We are not attacking profitability. By increasing revenue, we are going to increase profitability. Our problem statement is not saying reduce cost. If that were the case, I would then start saying, okay, how do we reduce COGS? How do we reduce delivery fee? How do we reduce probably marketing spends? Or probably how do we reduce offer spends, etc. Right?
Yeah.
But because our target is the revenue pathway, we are not trying to look at cost as a lever at this point of time. Had our business problem state been improve contribution margin or improve operating margin, then the problem statement becomes very different, because we then have to think of it both from a revenue lens as well as from a cost lens. So how the problem has been framed to us is how we're choosing to attack it at this point of time. It's not to say we shouldn't question this. So let's say we were having this open discussion with our leadership. It is absolutely possible that we can ask saying that, hey, but is this the right way of even asking the question? Should we be saying that focus on revenue, or should we be prioritizing, let's say, operating margin or contribution margin? And from that lens, how does then the order of priorities change? So these are open discussions that should ideally happen, no doubts about it. But in this case, we're assuming for a moment that, yes, let's assume that there is some merit in going down this path. Let's investigate and see what happens if we were to pick this as the real problem statement to go after.
Deepak,
Sorry, after Ajit, there was somebody else who was trying to...
Deepak and Sahil, I had a question.
Yes, Sahil.
So Deepak, when we started, we also debated that maybe AOV is important to increase profitability because that will help them the raising of the money. When we started down that path,
correct.
Okay, and if I were to look at in isolation, increasing the number of orders cannot improve my profitability if profitability per order does not go up. Okay, so from that lens, because when we started and we realized that AOV as a lens can also improve my profitability, because the cost of serving an order might largely remain similar in terms of delivery fee and other parts, but the AOV goes up, profitability will, and revenue both will go up. Isn't that something to also look at? Because that is how we were making the business KPI tree.
Absolutely. That's a very fair point, because as your number of orders increase, your cost structure is also going to linearly rise as well. So as opposed to, let's say, AOV, because average orders don't directly impact, directly has a cost implication, AOV has a slightly better marginal edge over it. Now, with that being said, if we were to then take a company level lens and take a step back, the question then would become, if there is a set of team focusing on increasing orders, then which team is focusing on doing the cost reduction? So let's assume we as a team go back and say, hey, we have done our analysis and it seems that if you really want to grow up revenue, we need to focus on orders. But someone from the finance team can say, but that also means that our costs are going to go up, which means somebody else then has to take on the parallel responsibility on figuring out how to reduce the cost. Would that be a fair way of framing the problem statement and dividing work then within the teams?
I just lost the sync between driving AOV led to driving revenue itself. Because driving AOV can drive both your revenue and profitability, whereas driving revenue can, also come at the cost of driving down the profits. So when we had taken AOV initially, my understanding was it is a lever which impacts both revenue and can also impact profitability. And now we're talking about levers such like number of orders, which are primarily revenue driven. I can increase number of orders by, say, giving a big discount, just hypothetically. Okay. So there is where I lost the link, because when we started initially, we said the business KPI trace profit and revenue minus variable cost minus fixed cost plus taxes. We did all that calculation.
Correct.
So now I understand this completely. If the lens was only revenue, had we have decided that the core objective is to drive up revenue, yes, number of orders and a comparison between number of orders and AOV is very valid. But when we started from AOV and from AOV we have gone to only revenue, how did that transition happen?
So the reason being, see, anytime a company is trying to attack a problem, it's not going to be a specific team that has been given the problem statement to improve revenue or profitability. There's going to be a bunch of teams coming together to solve that problem statement, right? The thesis was, can AOV help in driving towards that goal? Now, in our analysis, we are seeing that where does AOV directly attack? It directly improves your revenue. It has no bearing directly on the cost structure at this point of time. Whereas orders, it also improves revenue, but it is linearly proportional to the cost as well. Now, as a management, if we were to look at all of these factors, we could then say that, hey, if we really have to scale up growth and yet attack profitability, it means that orders seem to be the most effective way to grow, but there needs to be another team that also parallelly focuses on reducing costs so that the net margins that come out of it get better. Or somebody needs to figure out and say, hey, is there a way in which we can improve take rate? Or is there a way in which we can further squeeze out delivery fees, etc.? So we're not looking at any of these problems in isolation and saying it is a pathway and it's the only pathway. What are the pathways? We've been given the problem statement to look from AOV point of view, but management is never going to say AOV is the only lens to solve this problem from. Does that make sense?
That makes sense. Okay.
So see, because we're attacking as a case study, we are trying to focus, but in practice, organizations will never say that there is A. We are usually going in some form of an exploratory study with some early hypothesis, right? And a hypothesis can either turn out to be true or it can turn out to be false. So therein it becomes essential that just because the management has said something to be true doesn't mean it should be true. We can go back, we present our point of view, they can come in and say, if that's the case, here's what we then need to reframe our problem statement as. So in this kind of an exercise, if we go back and say that, hey, let's improve orders, the finance team will most definitely going to say, but I still see my contribution margin not reducing. What can we do for that? So someone will then take an executive call saying that, well, if that's the case, team A, you go after orders, team B, what do you think we should do to bring out unit costs? Or maybe someone will say, maybe unit cost may not be the angle that we look at. Maybe let me try to attack this problem from fixed costs. Any of this is possible. But then it's a collective decision to figure out which are the most effective levers, ultimately that work together to improve the profitability of the organization.
Okay.
So I think there was one other person who was trying to ask a question.
Yeah, Vishal here, Deepak. So should we reframe this problem to increasing the revenue while, let's say, not decreasing our contribution margin? And then we get two trees, right, at the high level, to increase the users and to increase the AOV. Then with the data, I decide between the two, which one I want to choose. And then I choose, okay, let's say I'm going to target the AOV and not at the start.
That's a great point. That's a great point. So at this point in itself, we could probably go back to the management and say, why not reframe this problem statement? But for a certain reason, I think it's important for us to double click. And as we go through the case, you will start seeing why that may be important. So as of now, it looks like focusing on revenue and trying to attack all of the other levers on revenue seem more effective from an organizational standpoint of view. Increasing orders definitely seems a better option. Why even go down the path of AOV seems to be a good question. However, there is a lens which we will come through as we go through the case study, which will probably make us think why and why not. And the current question that I have for myself is, all this data sounds good, reasonable, but is there a chance that we're missing out on seeing something critical? I don't know. And that's what I want to investigate. It seems prima facie that AOV seems to be a bad choice, but is there merit in going down there? Is there something else that we could be missing, which could open up different opportunities? That's the question I have in my head at this point of time. So I don't want to rule it out too early because we still have some time to convince the management. Do you think we should take a stab at just going down this problem statement a little more and try to understand why is this happening in the first place?
Deepak?
Yes.
Yeah, so Deepak, I think basically the way you would expect, let's say, users have a limited wallet share. Let's assume that the elasticity of a wallet share is not a lot. So
Right.
basically, those two metrics, which is the AOV and orders, right? They, unless we add a substantial portion of new users, which we also explored about, right? Those two metrics are meant to actually, I wouldn't call it like negate each other, but then these two metrics in some sense will actually cannibalize each other. Because I mean, people don't have infinite elasticity to spend, right? If you consider basically the disposable income. So I think those are the two ways in which I would think about it. So in this case, if I was looking at this data, I wouldn't negate that increasing AOV may be a bad thing, as opposed to picking up, that order problem. So far as I know that my universe of the new transacting users is infinitely elastic. So I would actually consider all three, and then like further deep dive on the exploration path on all three dimensions.
That's a beautiful point, because till date we have not talked about the consumer lens at all. We've been looking purely from business lens, and you've now brought in the notion of ultimately the customer is in the business of buying groceries, and it boils down to how much money they can spend per day, per week, per month, and what is our actual share of wallet there, and how elastic is that wallet. And I think it's for that reason we should be curious to go down the path of trying to understand EO. I'll probably take one more question or perspective, and then I'll move on.
Hi, I'm okay.
Yeah.
I think it is important to see that the 20% increase in AOV, how has that impacted? What is the impact of profit on that? And the 3x increase in number of orders, how has that impacted profit? That will be a good lens to see.
Most definitely. Again, ultimately, if we're trying to balance out growth and profitability, it is a good set of questions for us to ask to understand, hey, how has that finally led to profitability? One of the things that we are not possible to right now compute for us also to understand is, as your orders also scale, does your cost become more efficient? Because with scale, your serviceability cost, your delivery riders, etc., can be used a lot more efficiently as well, which means the unit cost of delivery, etc., can become a lot more valuable. Also, with greater demand, the amount of incentives perhaps that you have to pay out to your delivery partners, etc., can start logically reducing. So there are a lot of second and third order effects that, as of right now, with the limited, or rather for the lack of data that we don't have, we are not able to assess. But as a team, usually a good practice would be that whenever we do this kind of an exercise, is to make a list of exhaustive hypotheses to understand what drives these metrics and how does it affect various other metrics, say from a profitability point of view, retention point of view, which cohorts seem to be performing better, which cohorts seem to be ordering more, which cohorts seem to be ordering less, etc., so that we can get a slightly more nuanced lens of what is the ground reality looking like. Now, this is just a set of extrapolations that we're making based on only one data set that we've looked at, which is to say that gross order value is increasing, and it's because of orders and because of this is the only publicly available data. But inside the company, you would be having access to all your customer data over a large frame of time. And typically, more often not, what we do, or at least what I tend to do, is we tend to build a series of hypotheses asking, hey, what does the trend look like for any of these metrics? How does it look for various cohorts? And as you said, how does this affect your profitability metrics? How does this affect your retention metrics? Where is there high causality? Why is there no causality? So that you build greater confidence on not just the direct effect of the metric, but also the second, third order, fourth order benefits that could come by solving those problems, and then take a more educated decision on what can be the right set of problems or the right set of metrics to focus on, and how much can we move it by. However, for the sake of this case, because we are limited by what's available on Zomato's annual report, we're doing a little of high-level heuristics and saying that if this is the best data that we have, what kind of decisions can we take as a team right now?
One more thing to add, Deepak, right? Let's say if there is a power law applicable, 20% of the users contributing to the 80% of the order values, then probably I would focus more on increasing the average order value.
Most definitely. That's a beautiful point. And that's also the reason why we've got this hypothesis sheet listed out, right? Because we don't know what is this distribution of items per order, because we're doing at an aggregate level. And it could be so right that maybe 20 to 30% of people are disproportionately ordering, and the vast majority probably order once a month, or so not even once a month, maybe once in 6 months. And that seems to be the large population. Then the problem statement is very different in reality, right? Now we have populationized why some cohorts seem to be ordering disproportionately high and ordering a large number of items, whereas the larger population seems to be not performing effectively. Is it because we're acquiring the wrong set of users? Is it because they've been given the wrong kind of experience? Have they been given the wrong category onboarding experience? So there are a lot of unknowns which we are currently not seeing, which we should in reality, and hence we should be asking questions. So since, Vishal, you popped up that question, what do you think are other questions that we should be asking as a team when we look at data? So right now, we just look at a high level, hey, let's just look at the trend of average order value and let's look at the trend of items per order. Over and above what I've given as a very high level set of hypothesis, what are the other types of slices and dices of data we should be looking at, both for average order value as well as for orders, for us to understand the true nature of the problem or how the distribution looks within the ecosystem?
Deepak, I just wanted to add one more point. So right now we're talking about all our internal company data, but is there some merit to also study the industry benchmarks and then yardstick against them? How are we performing again?
Most definitely. But I have 2 points of view. Looking at industry benchmarks tell us what they have done and where they are at, but it doesn't tell us about the quality of execution, and it doesn't tell us what the upside is. And the second challenge is, just like how we have noticed how Zomato has chosen to define a metric in a slightly different way, different companies for a wide range of reasons can choose to define a metric in different formats. So what may happen is you may look at a metric and that metric could either be good, bad, ugly, and that has a definition which we don't necessarily have awareness of. And if you were to use that yardstick, we may end up misinterpreting and either feeling super confident that, oh, we're actually doing much better than competition, so that's a reason to be happy. Or it creates unnecessary panic and we'll be like, oh, damn, we're doing worse off than competition. And we may end up focusing on a metric which is absolutely unnecessary to focus on. So as a practice, I've usually said it's okay to know it, but not pay too much attention to it. Most of our decisions, we try to say, build it up from first principles as to how humans behave. What do we know and understand about the nature of this industry, which builds us conviction on this metric? And what do we understand about the market, which gives us conviction on the headroom for growth? I think those over a long term give us better conviction on the choices that we make as opposed to industry benchmarks. But that's just my very, very personal point of view. But happy to hear anyone else in this room who has seen merit in looking at industry benchmarks. It's not to say I don't subscribe to the theory. I like to see it, but I don't take it too seriously. That's my personal point of view. But would love to hear anyone else have a diametrically opposite point of view on this as well. Alrighty, if there is no other alternate point of view, maybe we take another minute or two to just think through if assume we were inside BlinkIt at this point of time and we had access to all the rich data that BlinkIt had to throw to us, what kind of data questions would be asking for us to spend some time to say that, hey, if I understand this data in this particular format, it would help me get a better sense of this metric or a better sense of why this is happening the way it is. Is there anyone who's raising their hands? Akanksha, did you raise your hand? Or I see also an iPhone that has raised their hand.
Yeah, I actually raised hand. I was thinking if we should look at which product or categories contribute the most to our revenue.
Sorry, could you just repeat that again?
Yeah, so I was just trying to say, should we look at the product or categories that contribute most to the revenue?
Oh, absolutely. That's a fantastic point. So if you notice, one of the last points that we have put here is category baskets. I think for all of these metrics, orders, revenue, gross margin, contribution margin, items per order, etc., we should do a thorough deep dive and break it down at a category level. So if you open up, say, BlinkIt, you will notice there is food as a category. There's beauty and personal care as a category. And then there is toys as a category. There's kids as a category. There are a whole other range of categories. It then becomes important to understand what is the distribution. Like, where do most of your orders come in from? Where is there concentration of items per order? It cannot be that items per order is uniform across categories. For example, a certain category may see more items per order than the other. And that could actually be where you can see elasticity in items per order. There could be other categories which are sparsely used but contribute to a larger volume of users, and therefore that is weighing down the average through which we are evaluating your items per order. So this entire average order value, etc., as a concept, because we are looking at it at a platform level, it's very easy to miss out on very, very specific cohort behaviors where there could be extremities or very differential behavior. And therefore, just looking at platform metrics may lead us to make bad business decisions. So I'm glad that you brought up that topic. There can be, and there is most definitely likely to be circumstances where different groups, cohorts, either expressed by category, by source of acquisition, by, let's say, economic class. For example, an iPhone user may behave very, very different from an Android user. Within Android, a Samsung user could behave very differently. Time of day, festival days versus regular days, men versus women, new cohorts versus repeat cohorts. Like, all of these are various dimensions through which, if we were to slice and dice data, we may see very different distribution patterns. So super, super glad that you brought up that point. Any other interesting such points that we should be looking at, which could change the way in which we evaluate this problem statement?
I was also thinking, actually, should we look at what kind of promotion or discounts we have done, before that have been effective in increasing AOV?
Most definitely, because ultimately, there is definitely the concept of offers and constructs which are out there. So we should understand what does items per average order value or revenue look like with offers, without offers, and with varying type of offer categories in itself. For example, if you were to give, let's say, low discounts versus high discounts, how does that change? So you have to look at the entire gamut. Sadly, I wish we had access to data that would just make this conversation a lot more fun. But the purpose of this conversation, again, is for us to at least get into the mindset of thinking in these directions so that when real life presents itself, you go down asking these questions and actually extracting those data points and then seeing what it presents to see if there are any meaningful insights that come out of it. I see Karan and iPhone having their hand raised. Karan, maybe you go first. Or sorry, iPhone, I saw you first. So maybe iPhone, you can tell me what your perspective is. Okay, iPhone is quiet. Well, okay, I'll then move on to Karan. Karan, what's your perspective here? What do you think we should be also looking at? Or do you have something else different that you think we should be doing?
Sure. Trying to play devil's advocate here, because many a times while we try to increase any parameter within from the world of metrics, we always try to look at what is the highest contributor from a product perspective, from a cohort perspective, from a demographic perspective. Sometimes while trying to increase things, products or cohorts that are already at their peak have already peaked. I think looking at the next line, that is, the median part. For example, if something is at 30 to 70 and the other part is at 70 to 90, instead of trying to increase the 90 to 100 part, it's better to look at the 30 to 70 part and trying to increase the second phase instead of increasing something that has already peaked. So this has kind of happened during one of my working experience as well, where we have tried to look at what is the best performing A, B, and C across various metrics, instead of just looking at things that are yet to peak, instead of increasing things that have already peaked. So, trying to look at...
Most definitely. And that's also the reason why we want to define these various sub-cohorts so that you can see what best-in-class looks like versus what is the pathway towards that. Like, for example, it could be that there could be 1% of customers on BlinkIt who probably place maybe on an average 15 items per order. And maybe they've peaked in terms, there's really no more headroom. But if you look at, let's say, early customers or a certain set of categories of customers who purchase other products, let's say not vegetables, but say snacks, they probably do one item per order or 2 items per order, and the average order value is 500. But what it tells you is there's definitely a pathway towards, a 2,000 rupee basket size. The question then is, what prevents this large cohort of customers who are doing small value transactions to move towards these power customers? Because ideally, these guys, this 1% will probably even contribute to 10% of revenue. Are your ideal customers. That's what you want. I mean, our life would be beautiful if everyone were to be that 1%, right? But there's something stopping the journey of these customers to go from being that one order per month or 100 rupee transactions per order to being that power customer. And that's why doing this kind of a data analysis helps us to build that perspective. What's the lay of the land? So the first analysis we did was to look at a very 50,000 feet view overview. And again, we're doing it for the base of this case study to just say that if this was the only data available to us, how might we debate? But in reality, in at least a company like BlinkIt or any large organization, there will definitely be a large chunk of data available. And when you slice and dice, you will want to not just check a cohort's behavior for the primary metric. So in this case, the metric is on average order value and revenue. But you may also want to see how does that therefore, for example, because someone is ordering 15 items per order, how does their retention and repeat rate look like? What does their average order value, what does their contribution margin look like? What are other effects? Are they increasing? Maybe are they bringing in more organic customers? Well, we don't know. So we don't have a true evaluation capability only because of a lack of metrics. But for the sake of any product thinking exercise that we do, at least we should embark on that journey saying, can we ask these questions? Even if I don't have the answers, I'm training my mind to get default into that mindset saying, how do I ask and attack these questions? And I think this is a very important nuance I want to share from slightly different lens, specifically for, say, people who are looking to crack interviews. More often than not, a lot of people who try to crack case studies try to only talk about that which they can tangibly prove. For example, I can only speak to customers, so I'm only going to present that point of view and stop there. But as an interviewer, I'm curious to know, assume you are inside this organization, what else are the other kind of questions you may have asked? I know that you don't have answers to those questions, but at least you're putting an effort to show me how you may have thought and probably even, engage in some kind of a conversation, say, here are reasons why I tend to ask these questions because here's what I've observed in the past. So I'm kind of curious to see how this may play. And this is exactly the question that you bring to the table right now, Karan. You've seen something in the past and that's making you curious. It's asking you to say that, I know that looking at meta platform level data is good, but I know that there could be disproportionate distribution of data and that may just skew the way in which we look at numbers and that could change the interpretation. So the problem with averages is it can be very misleading. There could be a lot of depth that is simply missing because we try to abstract numbers purely from trying to see that, okay, revenue is increasing. What's the easiest way to communicate to stakeholders? Average. Can I go and tell my stakeholders there are 50 different cohorts, each performing with n number of ways? The boss is probably going to be like, dude, that's just too much of numbers. Tell me a simple point. The essential point is say average is this, but did you know 3% of our users contribute to X percentage of items per order? They also turned out to be the stickiest customers and they also turned out to be the highest margin contributors for us. Now that is an important insight for me to look at. So sadly, we don't have that data. But by no means is it a reason not to ask these kind of beautiful questions. So fantastic. Thank you for bringing that to the table, Karan.
Thank you so much for that explanation.
Also, I'll probably take one last question before we move on. Because there's a lot of ground to cover and we're at 12:50. Don't worry, I'm not going to rush through this. We'll take as long as it takes to finish this. Sorry, if there's just...
Hi, this is Vinike.
Yes.
Yeah, hi. So one other thing which I would like to look at apart from simply comparing the high AOV versus low AOV customers is the funnel, right? What is hindering my low AOV customers from reaching that high AOV bracket? Is it some kind of a funnel issue? Are they not able to figure out which categories to find and how to go about it? Are they facing any issues during the checkout?
100%. Absolutely. Because what are reasons, like how does a new customer's funnel look like and why does that lead to low items? What does a super user's funnel look like? How does it change with geography, category, etc.? Maybe different categories for some reason have certain information missing, which makes me not trust the platform. For example, just throwing it out there. What if I'm actually trying to buy fresh vegetables and I don't know that the vegetable is actually fresh? Could that be a reason why I don't trust? So I may have come for that reason. I probably buy the item which seems trustworthy, and then I'm like, I would have loved to buy it, but just because the information is not there, I choose not to buy it. And therefore, your AOV could have been higher, but it just isn't. So bang on, great point of view in terms of looking at funnel data as well. Cool. Since there's a lot of ground to cover still, I'm going to move forward. All these are fantastic questions. These are the sort of questions we should be asking. I'll just put out a little caveat here. The challenge in the real world typically comes that once you have this incredibly large ocean of questions that you want to ask, two things get in the way of us really getting to insights. One is, which of these questions do you want to prioritize and get insights out of? The second challenge is, like you and your team, or like us and our team right now, there's going to be other teams which is going to have a ton of data requests, which just flood up the data pipeline and analyst requests. So it then becomes very important for us to be very judicious to figure out which amongst this is probably the first most important set of data cuts to look at, so that we can get to the earliest set of insights which give us confidence to go one level deeper. So it's good to know how to hypothesize and come up with the right set of questions. But the harder challenge is to know which amongst these questions should I prioritize and pass on to my team so that you can get the earliest set of data. Otherwise, you will be perpetually stuck in analysis mode. And at some point, the pressure from the leadership is going to be, guys, you're only analyzing and you seem to be stuck in analysis paralysis mode. Get going, show me some outcomes. So think through as well as to how you balance it out. Usually an activity that we try to do is we say, let's pick up the top 3 most important questions which give us the highest degree of confidence. And usually we try to debate and say that, okay, what is the 1, 2, 3 data sets which is going to give us most confidence? More often than not, I try to get some sense of distributions first to see how does a number or a metric get spread across various cohorts. Because usually averages, like one of you mentioned, can be misleading. So what is the best proxy for me to get a sense of distributions across cohorts? Usually, more often than not, my favorite cut is to look at users' age, that is new versus repeat versus late-stage users, because almost often on that, as a heuristics for e-commerce companies, and I say e-commerce, I talk about travel, Uber, your Myntra, your BlinkIt, and all these companies, your power users tend to disproportionately contribute, as also I think one of you had mentioned, right? So that insight over a period of time helps us to build the confidence, say that there's definitely going to be some skew. Can we know what that distribution looks like to know that there is no adverse skewing that's happening? And is there a reasonable spread for us to believe that there's opportunity? So that's one heuristic that I typically tend to use. The second heuristic we typically tend to use is there is very disjoint set of customer segments. For example, you're dealing with enterprise customers and SMB customers, or for example, you're dealing with Gen Z customers and let's say older populations. We more often than not try to at least segment it at that level, just to see if there is no ratios that are skewing up. So you need to figure out what that intuition is for you in the context of your industry and your business. Try to find out those top 2, 3 slices that give you the first level of confidence to go one level deeper. Otherwise, you're going to get caught in analysis paralysis mode. Lesson learned the hard way, when usually leadership comes down and says, get things done. All this really goes for a toss then. So that's just a little bit of practicality when we think about these kind of analysis. Cool. Moving on. So, like I said, I think there's still some merit for us to go deeper into understanding AOV. Now, like I said, because for this case study, I have to rely on information which was publicly available. What we don't have today is customer interviews, but we will make up for the fact that there are real life customers in this call. So we'll probably try to do some real life customer interviews at this point of time during the call. Second, we don't have all that beautiful data that we talked about earlier. So that is going to be the missing piece in this discussion. This next set that I'm going to talk about is largely going to be based on secondary research that I had access to and a little bit of my prior experience to retail, but I'm not going to bring in that nuance until necessary. We're largely still going to say that, okay, for a moment, if the best case scenario is us as a team today having only access to secondary research, how might that transpire? That being said, I would like for you folks, because you're also customers of these kind of products, to share insights, perspectives on how you view some of these things so that together as a team, we can question, debate, and see if we're able to identify insights on why does AOV behave the way it does. Is there any real opportunities there? Have there been opportunities we have missed in the past? And what should we then do next as a team? So with that, perhaps the very first question I tend to ask again is, what is the upper bound for increasing AOV as a concept, right? So we saw where AOV fits into the larger scheme of things, but how do we know to what extent we can play around with AOV? Is it really as hard as it looks? Because it looks like it's been stuck in that 450 to 650 range with its averaging around 500. Is that really the best it can move? If so, why is it? Like, these are some of the foundational questions that I have at this point of time that I'd like to double click into. So the very first question I would like to ask myself is, what influences AOV? Now, I think we've already had a little bit of the discussion, but just to quickly recap, what is the input metric for AOV? Like, what drives AOV at the end of the day?
Number of like the cost, total amount in one order.
Agreed. Yes. Total order value. Yes.
The number of times they order.
The number of times they order, would that not be part of your larger gross order value? Because we had figured out, right? Gross order value is number of orders multiplied by average order value. So that's where your number of orders fit in, right?
Correct.
So what is the input factor? So AOV in conjunction with the... Sorry, go on. Please.
Sorry. Number of items per order and price per item. These would
Number
be
of items per order, price per item. Okay, that's one point of view. Any other point of view?
Apart from price and number of items, I think delivery fee or other kind of services could all charges or revenue from other services could also come under AOV.
Those are output factors. What is input? What creates an AOV in the first place? Like, if you were to take a step back, see, right now we've been trying to largely look at from a business standpoint. Now, come in from the lens of customers and say, what does the customer do to generate an AOV?
Yeah, Deepak, if I can add, Snehal here.
Go for it.
Yeah, I think the basic here would be the customer need, because we are referring to the quick commerce, where the whole, the core here is that people are forgetful and they are adding items which are last minute. Now last minute items could be one or two, unlike how we behave on Big Basket. Big Basket, like, if I have to take my own example, I relate to it like monthly. Somebody would go to DMart, they'll have a list, tick tick tick. Generally that we will not do on Instamart or on BlinkIt. So that becomes a little tricky. Now nobody would have 10 items that they need then and there. I need 2 items for my breakfast, right? So slightly for quick commerce, increasing AOV is tricky. But coming to your question, I think it is from the need of the customer. And the only way I see here is having a larger catalog.
Got it. So we'll come to, the solution thinking in a bit. Let's just try to, step by step break down this problem so that we don't jump any steps. So we're heading in the right direction. You're absolutely right. But I just wanted to probably go a little slower and try to understand, is there a way in which we can probably, just like how we did the KPI tree breakdown, maybe let me rephrase my question. Is there a way to mathematically express AOV so that at least we understand what is the mathematical representation of AOV from an input standpoint?
Sure. Would that be customer need?
The customer need results in a certain metric, which in conjunction with another metric generates your AOV. So I'm just trying to backwork from AOV. What is the mathematical representation of AOV? So one way of representing it is say total order value divided by total orders, but that's the output view. The input view would be to say there are certain actions, if done, generates an order value by the customer. What are those input conditions?
I think number of product searches, number of additions to cart, number of payments initiated, all of those.
Got it. Great, great. So yes, that's the right direction we should look at. So just to make this visually simple, this is your final order value that comes on a Swiggy or an Instamart or a BlinkIt. And if you see, you have a bunch of items and each of them have an item selling price. And the sum total of all is your order value. So ultimately, your AOV is nothing more than for a order, it is the number of items multiplied by the average item selling price. And therefore, if you were to extrapolate that to multiple orders, it is the average number of items per order across all orders multiplied by the average item selling price, which multiplied together gives your average order value. So this way, what we're trying to say is we know mathematically the input components that we need to attack to understand why is average order value low. So now the question that we ask ourselves is if average order value is low, what does it mean from an items per order and what does it mean from an average item selling price? Like how do these two factors play together to result in the final average order value being low at a business level? So this is now what we're trying to figure out now. What influences customers on the number of items bought in an order and what influences customers on the price of items bought? And Snehal, this is exactly the point that you're trying to raise, saying that ultimately boils down to consumer behavior. Therefore, our question is, what makes people pick and choose the kind of number of items that we see as numbers today? And also, how does it influence or what factors go into governing the price of items that is being put? These two things multiplied together results in our average order value. So now what we're going to do is we're going to understand average order value as a concept. We're trying to understand the behaviors, the reasons, which factors into why it is the way it is. And are there things that we are oblivious to, are there things that we are blind to, which prevent us from maximizing this opportunity? So that said, again, where should we start to understand this problem? What is a good origination point for this? If you have to understand, we know that we are trying to be curious to understand. There are certain things that customers do, and therefore don't do, which result in a certain number of items being picked up in an order. And that also is related to the price of items that go into that order, and hence you get the AOV. If you have to understand this, where should we start this journey from?
The time of their order.
Yes, 100%. The journey starts from there. But in terms of structurally, like thinking of this from a problem-solving standpoint, how do we structure this problem? Like, how do we put some method to this madness? How would we break down this problem statement?
So, like, I would start from the assortment, Deepak.
Okay.
What is the assortment available, right? That will give discoverability and the selection, and also the quality of the assortment, right? And then maybe the pricing aspect of it. Like pricing again can go in discounts and offers also, but at the high level, assortment, pricing, and quality.
Got it. Okay, assortment, therefore selection, therefore price, etc. That's one way of trying to define an origination or a starting point for this problem. Are there any other ways in which we can start this problem?
I think we can choose between should we influence average items per order or selling price per item. So we can take the call and then move ahead.
Okay, we can choose between either of these levers and say which of these do we dig into to understand what to attack. All right. Any other perspectives on how to start this problem?
Hi, Himanshu, this side. I believe I would want to look at a customer journey within the platform when they come in. Or how do they start considering the set of products that they're buying? How do they decide the product to buy? And once they've selected, how do they move on to make the payment? That entire journey itself can give me an idea about how to influence the customer.
Got it? Okay. All right. I'll take one last, maybe I'll go with Anurag.
We can also look into, so basically we broke down the formula of AOV, so we can look on the items that are available and what is the GMV on each item. So if the GMV of a product is high and that is added to a cart, which will result to a higher average order value.
Got it. Got it. Got it. Cool. All these are very interesting answers. No doubts that you can start from all these points. The point of view that I start with is trying to put a 5 whys to it and understand your average order value is low. And therefore, the questions I have is, why do, first of all, customers have low number of items per order and therefore low average items selling price getting into the basket? And to understand that, the question that I ask myself is, what is bought and what is the buying behavior of these items? Ultimately, every item that is being bought by the customer happens for a reason. So before jumping into the funnel and trying to understand the journey within the funnel, I would rather like to take an outside-in view to understand, why is this customer doing this in the first place? And the reason for such a thought process is also that more often than not, typically when we try to do any kind of product analysis, we tend to put ourselves into the ecosystem saying that our customer only exists in our world, and therefore all the problems that they face is within this universe, which is usually not true, because if you think from a jobs to be done point of view, BlinkIt is a solution for a particular job. Long before BlinkIt, there were other substitute products that fulfill this job. So we therefore need to take a step back and understand the origination of this behavior in the first place. BlinkIt is a solution. Our solution will have its own shortcomings, no doubts, but it's more important to understand the origination of this behavior, understand why does this behavior exist, what is the first principles of this behavior, and what are other adjacent behaviors. The second reason why we do this is, when we try to attack this problem, if we just jump into what data is present, we are only going to see what we have done wrong. It misses out on the opportunity space that is there outside of the world of BlinkIt, because ultimately our goal is to increase average order value, but it may not be that we have done the right thing, and it may not be that we have understood this problem well. So to remove the bias of what we have done and to see this behavior from a foundational level and not so from a solution level, I tend to, as a default practice, say, for a moment, forget that BlinkIt is my product or Zomato is my product. I rather want to emphasize and spend my time in trying to understand, why does the customer behave the way they do, and look at it across the spectrum of adjacent behaviors of grocery buying. So in this case, BlinkIt is for a large reason, a grocery app / beauty and personal care app, and then there's a whole wide range of other categories as well. So if these are all the products that are being sold, I would like to understand the buying behavior across all of these categories. And in that context, I'd like to see, where does BlinkIt fit in? Where does Zomato fit in? What are other ways in which the customer is trying to fulfill the problems? Why do they choose us? Why do they choose others? Because that then gives me a larger opportunity space and a deeper understanding of consumer behavior, as opposed to getting locked into the narrow view of how we have chosen to look at the customers in the inefficient ways in which we have solved the problem. So that's the reason why I don't look at it from the solution lens or our own product lens, rather trying to take a very large step back and look at it as a customer behavior problem in the context of certain categories or articles or products that they're choosing to buy. And therefore, the very first question I think one of you had mentioned is to start by looking at what customers can buy on BlinkIt. And in the context of these products, groceries and kitchen, snacks and drinks, beauty and personal care, not how they buy on BlinkIt, but how do they buy in general all of these categories, because only some of it is being fulfilled by us, because we are not the largest share of wallet for all of these categories. How do they look at this category overall? Where do we do well within our category, and what are opportunities missing? So to understand that, I tend to not lock down the behavior and say, in the context of BlinkIt, how do you look at it? In the context of all of these categories, how does the customer behave? And how did they look at the entire universe of products and solutions out there? So that's the thought process. I'll take a pause, and I'd like for you folks to share your point of view on it. What do you think makes sense to you about it? What do you think says that, don't you think this is like boiling the ocean? Happy to hear perspectives and counter views as well on this.
So just putting a thought on that. So before we get into the very natural user behavior analysis that we're doing as to before BlinkIt, what was the way that they used to solve for this problem? And before this, we defined these two levers, right? One is the number of items in the basket and the average price.
Yeah.
So should we also now look at how much influence do we exercise over each of these two levers? So for example, the cost part of it, the price of an item, will largely be beyond our control because there's a set MRP and we can only go up till then until we get into white labeling and all of that.
Yeah.
Whereas the items is something that is more under our control, and hence we think more about increasing the number of items per basket.
Agreed.
And then we drill down into the user behavior as to the number of items per, how do we get an influence from?
I hear you. There is merit in that line of thinking. The only reason why I choose not to go down that path is we are preemptively constraining ourselves from understanding the universe. Now, because we are trying to get a full-fledged understanding of grocery shopping, yes, we can look at items selling price and say, okay, there are levers available there, but that may make us miss out on certain reasons as to why people do certain things. And that may not allow us to capture some beautiful insights. So for that reason, I'm not trying to put any hard boundaries to say, I want to even double click and only try to understand item per selling price behavior. I would rather like to understand the overall buying behavior. And in that, I'd like to observe how does number of items manifest. So rather than keeping items per order as the lens from which I'm looking, and trying to see what do people say around that, saying, okay, how many items do you buy? Rather, we're inverting and saying, how do people buy and how does that reflect as items per selling price or items per order? Does that make sense?
Understood, yes. But both the approaches have the pros and cons. So here, we're trying to look at the entire user journey, and hence the study will require a considerable time. Whereas if we narrow down it to the number of items and then the ways to optimize it, we might figure out some low-hanging fruits over there.
100%. So for a moment, let's then give ourselves the freedom to say we have a little bit of time. What is the best possible way to approach it? And then if we were to put ourselves into that hard constraint and say, listen, we have 2 weeks to figure it out. Should we even do this, or is there better techniques rather than spending time observing the customer?
This makes sense, yes.
Right? See, ideally, almost any team can build great products if you give them infinite.
Very good, Arjun.
Sorry, Akshay, is that something you're saying? Okay. So you're right. By directly clicking into items per order and just using that lens, we may see certain patterns. It's just to avoid getting caught into the trap of missing out on any other larger behavioral patterns, which we're otherwise not seeing. That's the reason why we're choosing to take a very holistic view and saying, yes, items use the product, but first let's understand buying behavior at a category level and then see its implication for an item's order so that we can see if there are any larger opportunities missing out. That's the broad thesis. And yes, time constraints does play a role. For the moment of this case study, let's assume that we have some reasonable freedom of time to actually find out some really good ground truths. And then let's discuss and debate what can we do in the absence of that as well.
Got it. Thank you.
Cool. So with that, once we've identified all of these categories, here's probably the set of leading questions that I would like to ask. So you have all of these master categories. And with the case of any consumer buying behavior, I think these are some fairly standard set of questions that you'd like to understand. Why do you buy? How often do you buy? Because we're trying to understand the implications for quantity, we specifically want to have that lens called out as well so that we don't miss out on it. Where do you choose to buy? And what factors determine why you choose to buy at that specific place? It's not to say it is 100% exhaustive, but this should probably cover most of the essential set of questions that you want to uncover in terms of customer behavior. I'll take a pause here, and I'd like for any of you to share points and say, is there anything else you think we should ask? I'm not saying that this is holistic, nor 100%. There's a good chance I may have missed out on something. Therefore, opening up the floor for you to suggest and say, hey, is there anything else that you think is an important question for us to ask? And why do we think we should ask that question? And it has to be applicable for all of these categories. It can't be like only for a particular product or a category or an article. It has to be fairly generic so that you understand the overall buying behavior. What else do you think we could consider?
Something to do with what is the price that is generally ordered for this category?
All right. We could pay attention to price as well. No doubts.
Like I would say price would come under the factors that will influence, but more probably I would like to know why they buy from that particular location, right? Place of purchase. Like
Would
what's
that
the
also
reason?
not come as factors which influence place of purchase? Is it not broad enough to cover price or anything else which makes me say, I would like to buy at Instamart because of ABC reason. I would like to buy at my local Kirana store because of ABC reasons. Is that not broad enough to capture all of those nuances? That's why I'm keeping it very open-ended, not to be too caught in that. Is there anything else at a meta level that's missing out?
Like that will capture under, let's say, convenience or something, right? Very broad level under the factors which will influence, but I will not be able to know the nuance. Let's say groceries I buy from local market, but what's the exact reason?
So
not just the convenience,
I'll
but
try
maybe
to
quality or something else.
Represent this as we go through this, because I have verbatims of customers, and we'll see how we're able to map it into each of these boxes. So the factors, so the reason I kept it very broad is to largely put all types of attributes and vectors which may make an individual consider. And I'm not trying to say one is more important than the other and one is less important than the other. For example, convenience could be a reason. It could be the fact that 20 years my family is buying, and therefore 21st year I'm not going to be that person who decides to switch out. So it's just pure familiarity. I'm even considering cases where a family could say, I go to the supermarket because that's where my son has fun. All of those reasons also get covered under this. So I'm keeping it fairly broad enough so that we don't miss out on anything. We can then judiciously choose to define and say which amongst this is the bigger pattern emerging out.
Yeah.
Is there anything else, major black holes that is missing at this point of time that we should be really looking at? Like I said, this is not perfect, nor is it 100% exhaustive. There's a good chance I may have missed. So I'm looking to see if there's anything very, very important that has been missed.
Deepak, Karan here. Can I take a stab at this?
Yeah, go for it.
Yeah. So while we are trying to, be mathematical about all of this, which is great, the core value prop of quick commerce is me immediately wanting something based on certain external factors and me trying to make sure that I have that. So while we are trying to, gather metrics, let us assume that we have all the metrics for a 12-month period or for a 24-month period. In case of quick commerce, seasonality plays a very important role. For example, if there's an India-Pakistan match, immediately making sure that SKUs of Indian jerseys can be stocked up so that that can be sold, and that can be one-off event. For example, BlinkIt, their founder shared that the sale of condoms was extremely high during Valentine's Day, or the sale of chocolates was higher during Mother's Day as compared to Valentine's Day. So even if I check for certain products that might be sold only 2 or 3 times a year, but the sale itself during that time supersedes anything else. So adding in seasonality disproportionately spread across those 12 months can also be a key factor when it comes to quick commerce as a segment.
Fantastic point. I am clubbing all of those nuances under triggers for purchase. Why does an individual purchase? So, example, an event, for example, Diwali could be a reason why I suddenly buy a bunch of home cleaning equipment, right? So for the category of household items, as we do, so one of the next things we'll actually cover in this slide is to say that once we have identified these meta themes around which we want to dig deeper, I'll actually go to the next slide as well to give a little more clarity. We need to ask ourselves, what are the various pathways to insights? This is just questions. But how do we get answers for these questions? What are the methodologies available to us? You can speak to customers. You can do data analysis. You can do secondary research. Sorry, I've repeated secondary research twice. You can also have personal intuition. Because, see, over a period of time, if you've been, let's say, in a particular domain, you tend to pick up patterns on why customers do what you do. So you can add in that weightage as well. Sometimes you just don't have, there's no way to prove or disprove. And if you really want truth, you might as well just ship something out in less than a week's time to prove a hypothesis. This is also another pathway to find out an insight, right? So all of these are techniques available for us to understand why or why not people buy these categories for the reasons that we're trying to understand. When do they get triggered? What are the reasons? It could be an internal trigger, it could be an external trigger, it could be seasonal, non-seasonal. We're trying to look at all gamuts and possibilities. We're not trying to be restrictive. We're trying to be exhaustive in this process, right? Likewise, frequency of purchase, it could be once every minute to once every few years. We're not being restrictive about that as well.
Okay.
Quantity as well, exhaustive, 0 to infinity, doesn't matter. Place of purchase, we're not restricting. We're saying every possible place where grocery can be purchased. We want to understand all of those nuances. Again, the reason why we're going so exhaustive, so broad, is sometimes when we get too narrow, we will get a lot of good short-term results, but we may miss out on structural opportunities simply because of the way in which we have framed the problem statement, right? So to avoid getting caught in those kind of echo chambers, it makes a sense to just take a step back and say, what if we're not BlinkIt, the last-minute app? Our problem is to solve for customers. What is our total market we're trying to operate in? Our total market is solving for groceries. That is the absolute addressable. It so happens that today, the way I deliver value is through convenience and quick commerce. But what is the totality looking like? Where do I have good adjacencies? Where am I doing well? Where do I suck at? Where are other opportunities that are coming up? Like, to get that world view or lay of land, we need to take a very unobstructed view of the market, try to understand behaviors, and then see where you are well positioned. And are you doing a good job there? Are you doing a bad job? All of those questions also exist, right? That said, we need to then also do some form of preliminary mapping to say, okay, what techniques work well for each of this? For example, triggers of purchase.
Correct.
You can do a voice of customer, you can do secondary research. But maybe for something like quantity of purchase, data actually helps do a better job for me because I have internal data. But what is the pitfall of that? The pitfall of that is I can only see data of my own platform. I don't know the behavior outside of my platform. So I can't treat that as a world truth. It's the truth within my world, but that is not the truth for the entire world, right? Likewise, frequency of purchase is what I see. I could say, let's look at internal data and conclude based on that. But the fact of the matter remains, you are just one conduit to fulfill a customer's need. You're not the entire conduit, which means we need to probably look at outside factors as well. So you need to sometimes look at multiple sources of truth and then try to merge them together to see where do they agree, where do they disagree, right? That will give us a far better lens of the truth as opposed to picking any one source and saying, nay, we're a data-driven team, so internal data is the best way. Well, I have been down that path too many times to see that companies get so blindsided with their own internal data that they pick out on macro trends. To give you a very solid example, while I was working at Zynga, we were obsessed with our own numbers. Like day in, day out, like you ask any PM, even the GM would wake up and say, dude, this is our number. The problem with such a deep data obsession was we forgot about the fact that customers play games outside of our platform as well.
Right.
Our numbers were looking beautifully healthy. Platform shift was happening. We missed out on that bust. Suddenly, one fine day, it was not a 1% drop, 100% drop. People just switched, right? So when you get too caught up with our own internal data, there is a good chance that you may miss out on other behaviors. And more often than not, data only tell you what happened. It doesn't tell you why it happens. And there's a good chance you may miss out on smaller trends that are picking up the market, which may not be looking large, but can be potentially huge 3, 5, 7 years later. You don't want to wake up 7 years later with somebody else taking that market away from you. Just like how quick commerce suddenly came out of nowhere and all the retailers were like, whoa, what just happened? Because someone was like, Who's going to be sitting at home and ordering? What kind of lazy people are these? Like, we make these kind of assumptions. It's very likely that as BlinkIt, we can also make these kind of dumb assumptions.
Right.
So
Very
how do we not get trapped in our own echo chamber? How do we not be blind to our own biases? That requires for us to say, we are not BlinkIt. Our job is to solve customer problems and make money and be profitable. But to know that, we need to understand the entirety of the market. So use all of these techniques, figure out. Now, for the purpose of this case study, sadly, we don't have data. Sadly, there are a few other data points I wish we had. We would have made this discussion a very interesting one. But we can still make it interesting by doing two things. One, we are customers ourselves. I'm pretty sure a reasonable portion of the 75 people on this call at this point of time have used Swiggy, Zomato, go to their neighborhood stores, go to a Kirana store, go to a D-Mart, buy groceries, yada, yada, right? So how about we turn this conversation right now into a customer interview? And to make this fun, I would like for one of you to volunteer to be the interviewer and one of you to volunteer to be the person being interviewed. I will play the role of a moderator. The reason why I'm choosing to do this is, one, I can also give you feedback as to the kind of questions that you're asking and tell you, hey, what are you going to get out of this? Is this really the right way of framing the question? Are there better ways of framing? Otherwise, if I ask, there's not much of a learning opportunity. So this way, we can probably do about 5 customer interviews. So 5 participants can interview, 5 participants can choose to be interviewed. I will play the role of a moderator. Feel free to ask anything and anything that you like. I will only listen. And at a point where I feel that maybe the question can be tweaked, I will present a point of view at the end of it. So that's it. Who wants to be the first interviewer and who wants to be the first interviewee? No pressure. Nobody wants to be interviewed? Okay, I
Like,
see.
will we go category wise or?
Yeah, so to make this effective, beautiful point, let's only pick one category because it's going to be impossible to do any justice to all categories put together. So for the sake of this exercise, focus only on groceries.
Okay.
So
can I volunteer to be the interviewer?
Is that Ashwin speaking?
Yeah.
Okay, Ashwin, you're the interviewer. Who would like to be interviewed by Ashwin? Any volunteers? Ashwin, be nice. Don't ask question.
Yeah, maybe I can volunteer.
Fantastic.
Vishal,
Love it. Love it. Okay. So Ashwin is going to interview Vishal. The floor is open to you folks. We'll probably spend about 2 minutes. So make sure that you ask meaningful questions. Don't make Vishal feel put him in a tough spot. With that, let's have some fun. Ashwin, over to you.
Yeah. So I'm choosing groceries as a category. Is it like have we fixed up on a category or?
Yeah, groceries.
Okay.
Yeah.
Okay. So Vishal, where do you buy your groceries from?
Like, it's mix of from the local market and maybe from the quick commerce apps also.
All right. Yeah, sorry, folks. I'm really sorry, Ashwin and Vishal, to interrupt. I would like the participants to make notes because I'd like for us to use this content as part of our decision making. So, everyone else who is actively listening, please take notes and understand what is the question that Ashwin is asking and what is also Vishal responding, so that after we go through 5, 6 interviews, we can see some patterns coming out of it. So, with that, back to you. Sorry, Ashwin. Sorry, Vishal.
Yeah. So from local markets as well as apps, right?
Correct. Yeah.
Yeah. So in the local market, let's say you're gonna go buy some groceries. Do you do that when you're in a hurry, or do you plan, let's say, beforehand about a list of groceries that you're gonna buy? So how exactly would you go about it?
Like, I typically don't plan, but maybe on weekends when I have ample time, then I go to the local market. Otherwise, it's on apps.
Okay. Okay. And when you're getting your groceries, would you be okay with receiving it in half an hour, or like is 10 minutes? Let's say you're used to 10 minutes now, so you'd prefer a quicker delivery of your groceries.
Like it depends on my need. Like sometimes I want to get it instantly, right? Because let's say on Monday morning, I forgot to purchase groceries Sunday, so maybe I need it in 10 minutes. But like it depends on my need. So mix of.
Okay. Okay. And how much do you spend per month on groceries usually?
Like it's around 10K overall.
Okay. 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 And
Ashwin, you can use these open
yeah,
and
yeah. I'm trying to frame
as well.
questions based on the columns. Yeah. Yeah. So do you batch, let's say, these purchases like once a week or twice a week, or let's say, obviously you'll have some, let's say, instant needs, like you need to like get a packet of milk or something like that. But apart from that, do you have like a set number of times you order per week or something like that?
Like I typically do large order once a month, and then it is spread out as per my need. Like one large order I do in a month. That may be from DMart or from
Yeah.
quick commerce or Amazon. Yeah.
Okay. 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 Apart from this, I think I've run out of questions to ask.
Okay, okay.
Yeah.
Ashwin, if I may ask, I'll just
Yeah.
chime in.
Yeah.
Vishal, so you mentioned that you typically make one big purchase and you tend to go between DMart, Amazon, or quick commerce. Would that be a fair
Yeah.
statement?
Correct, correct. Flipkart also, yeah.
Flipkart as well. Fantastic. When do you decide to go to Amazon versus DMart versus Flipkart versus quick commerce? How do you walk me through the last time you had to make such a bulk purchase, and why did you pick any one of these? When was the last time you actually made this bulk purchase?
Uh, like last month only. So I had to
Got it.
stock up the groceries for the month.
Beautiful, beautiful.
So I did place two orders. Like DMart Ready is available, right? They deliver orders at my place.
Got it.
And in terms of discount, I found that Flipkart has more discount. So I split orders between two, uh, Flipkart and DMart Ready, and they typically delivered in the second day itself in the morning. So since it was a stock up order, right, for a month, so the pace of delivery wasn't much concern, and it was eventually second day morning.
Got it.
So that way I placed that order.
Understood. And how did you decide, or rather, what did you order on Flipkart and what did you order on DMart?
Like there was no distinction, but mostly what are the items that I typically purchase from DMart? Like let's say particular brand soaps which are available only in DMart. And I have my cart ready, right? Let's say which I had ordered last time. So I just go there and stock up those items. So
Got it.
once typically I form my cart, let's say what to be ordered from DMart and what to be ordered from Flipkart, I just go there and add and probably just check the previous item order pricing, right? So let's say if typically I had ordered and it is purchased at 100, but now it's 125, maybe I would check. But if it's the same, then I'll probably just add and place order.
Beautiful, beautiful. And when do you typically then choose to go for quick commerce? What triggers? When was the last time you made a purchase on quick commerce?
Yeah, like yesterday, last like right now I'm away from home, but typically what happens on Sunday if I don't get time to shop, so Monday morning we have to cook, so I just order in the morning and it comes in 10 minutes. Or late night snacks,
Got it.
ice creams after meal. So those are the typical.
Awesome. I do the exact thing. I love ordering ice cream. It comes so much faster. Beautiful, beautiful. And are there any reasons, like you said that there's no distinction between the products that you buy on Flipkart and the ones that you buy on Amazon, DMart, why then go through two different apps or two different shopping platforms?
Because usually before this, right, I used to purchase more at DMart. Flipkart has been just a recent addition, just because looking at their ads, like, okay, the discounts and the availability. So I've just shifted, but majority was at the DMart, so that is why.
Got it. Got it. Beautiful. Beautiful. All right. No more questions from my end. That was a great interview, Ashwin. Vishal, thank you for participating. Let's do one more. Who would like to be the next interviewer and who would like to be interviewed?
I wouldn't mind being interviewed.
Okay, Nikhil wants to be interviewed. Who would like to interview Nikhil?
I can interview Nikhil.
Go for it. Twisha, please feel free to interview Nikhil.
Sure. So this is again for groceries, right?
Yes, groceries is going to be our pinpoint focus. Again, we could do a lot more. It's just in the paucity of time, I'd want us to focus so that we can at least get some beautiful insights.
Sure. Hey, Nikhil.
Hey, Twishi.
I would like to understand generally how often do you buy groceries?
That actually, yeah, mostly every 3 days, every 4 days.
And like, how do you decide that this is when you want to place an order? Like, when do you decide that now is the time to place an order, for example?
Oh, okay. So I usually stock it up weekly, but then the reason why I have to switch to every 3, 4 days is because sometimes I get stocked out. Sometimes I have people coming over, so there's more groceries being used, and I want fresh things, so I just pull out the app and quickly order.
Got it. So how do you decide what to order? Because like you mentioned, generally you mentioned two things. One, you stock up, and then you also mentioned you like to order fresh items. So, I mean, how do you decide what to stock up and what to order fresh?
Right. So, for example, groceries, right? Vegetables, bread, milk, all of those things, dairy products, I stock it up weekly. And if there are people coming over, I'm hosting someone, or if there is friends coming over, and I have to ask the cook to make some more food. So at that time, I just whatever is required, I order, and I don't. So, for example, things like tofu and things like that, you don't need that much of stuff, so that I don't do bulk order. For that, I would prefer to just quickly use quick commerce like BlinkIt or something.
Got it. Got it. So generally, items that you don't use on a frequent basis, you order on a case by case basis when you have
Yeah.
when you host friends. And it's interesting. And how often do you host friends? Is it like twice a week, or how often is that?
Once a week, maybe once or twice a week. Yeah, one to two times.
Got it. Got it. Great. And do you also like stock milk products or dairy products at a weekly level? Because that might get,
uh
yeah.
Yeah, so for milk, I have a person who comes and delivers milk every day. But no, not all dairy products. So, for example, paneer is something that I'd probably buy 2 packets on a weekly basis, and then see how much is being used based on what is being prepped at home.
Got it. And again, what platforms do you use to make these purchases?
I live in Bangalore, and I actually get all my groceries done from a hypermarket who delivers it. So my quick commerce purchases are usually only for things which are immediate needs.
So your immediate needs, from what I understand, only happens when you host folks, right?
Yeah, host, or there is a shortage of items that I've not stocked up, or things that I want. The use cases are very niche.
So again, just to understand it better, so how often do you use a quick commerce app?
Four to I don't know, but actually 6 to 7 times a week max.
Got it. Got it. And why do you prefer quick commerce apps when you are when you need items delivered faster? Like, does the other local shop that you use takes time to deliver? Like, what's the time to?
Yeah. I call the local shop in the morning, and around about in the evening time is when they would come and deliver. This is something that I get it very quickly in 10 minutes.
So, because you mentioned that you order through quick commerce 6 to 7 times a week. So, what are the items that generally constitute these orders?
So sometimes it is like I mentioned, shortage of things that I have not stocked up.
Like,
Sometimes it is mostly snacks and things that I don't get from my vegetable vendor. So there can be Lays and all those kind of junk kind of food.
so you use quick commerce for ordering snacks and grocery. Like, do you also use it to order groceries? Like, do you fell short of, let's say, some vegetable or onion or potato, or is it generally snacks or cold drinks, etc.?
No, I use it for both, but groceries is more of a thing where it comes from an need of shortage, and at the same time there are certain things that you don't get from your vegetable vendor, which might be there on Swiggy or BlinkIt. So that is when you go for that is when I go for BlinkIt.
Got it. Got it. And has it ever happened? Like, for example, you have ordered your weekly purchase of, let's say, 1 kg of potato from your hyper local person, and then in the middle of the week, you realize that you need 500 grams more of potato. I'm just using potato as a proxy
Yeah,
for
yeah.
other vegetable. And then that is the time when you use a quick commerce app to order. Does
Yeah.
that happen? Or
So like I need 500 grams more, right? So
right.
yeah, that is the time I go and just quickly try to. Or also another case would be like, for example, fruits. So some fruits I want cut up fruits, so that
Hmm.
is easily available on BlinkIt
Got
or Swiggy, Instamart.
got it. Yeah, I think thanks a lot. That's all from my end.
Awesome, awesome, beautiful, beautiful, well done interview. Let's. I'll actually now jump a little forward so that we can cover a little more ground. We'll go through a set of custom interviews I've collected as secondary research, and I want you to keep a track of the notes that we've got right now, and then we'll try to understand with all of this data. Again, it's limited data, so we are going to see some form of bias. But again, for the sake of this interview, just going through the journey of what it is to look at data and make a decision, and how do we make a good decision out of what we have at this point of time, right? So what I've done is there's this blog called India Notes, which is got this collection of beautiful interviews. It's run by Dharmesh Ba. If those of you who don't know him, you should follow him. Has done a lot of good user research. So I thought I could piggyback on his user research and use that as material for our conversation, because these are fairly uh, well articulated and well structured interviews which bring a lot of insights. Now would be a good time for you to again take screenshots. What I'm going to do is I'm going to present each screen for about 5 seconds. Take a screenshot, add it to your notes, right? Once I go through the entire set, I'm going to ask you to spend some time going through each of the lines, the verbatums, and start seeing if you're seeing any patterns. You also have witnessed two live interviews right now, one by Vishal Ashwin and the other by Twisha and Nikhil. Collect, combine all of that together, and then let's see what patterns are emerging from it. And given this, what kind of decisions can we take? That's the activity we're going to do now. So this is the first screen. We'll spend about 5 seconds here. Feel free to take a screenshot. It has a lot of details. That's why I request you to take a screenshot, keep it aside so that it becomes easy to reference while you look at 3, 4, 5 different such interviews to get a semblance of what patterns are coming out. So there's a lot of that coming up, right? In case I move fast and you'd like for me to go back to a screen, let me know so I can go back in case I'm going a little too fast. So this is the first screen. Take a screenshot. Spend some time here. So I'm going to the next one. Right. Moving on to the next one. All right. Moving on to the next one. Right. Moving to the next slide. One more. And one last one. Cool. I hope all of you have taken screenshots. Now, what I'd like for you to do is spend a few minutes. It's 1:46 now. I'm going to give you about, say, 3 to 4 minutes. I know it's not the most ideal amount of time, but nonetheless, quickly have a look through what is being said and try to make some notes on what are some common patterns and observations. Here's what I'd like for you to do. I'd first like for you to see if there's some way to classify these customers into any form of buckets. It could be one bucket, it could be two, it could be three, it could be four. What do you see is the most ideal way to see similarities between them? The second is, given those similarities for the set of customers that they have shared verbatims, in this table, I'd like for you to figure out what are the patterns that you notice. For example, for a particular customer, triggers of purchase, what do you see as the trigger of purchase that is being mentioned? Do you see any signals that they're sharing in terms of frequency of purchase? Do you see any indication of where they're purchasing? Do you see any semblance of what are the factors that influence them to purchase? So spend a couple of minutes, maybe 3-4 minutes, take a screenshot of this as well and feel free to override on it, or rather use this so that you can fill it in any sheet. Take a screenshot of this as well. Then go through these personas, their verbatims, their explanations as to how they shop, why they shop, where they shop, when they shop, etc. And at the end of maybe another 2-3 minutes, we will try to first answer the question, what is the buckets that we're seeing in terms of customer behavior? Then the second activity we'll try to do is try to list down what are patterns or abstractions of what they're seeing into those key set of questions we've been trying to answer. So giving a couple of minutes, once we do that, we will try to see what interesting things are coming out of it. Alrighty, now let's open up the floor for questions. First question, is there any broad way in which we can classify these customers? Any broad observations, buckets of people that we can put them into?
Probably age group we can do. Like the younger prefer online and the elders are more onto the offline store maybe.
Okay, that's one way of classifying. Any other?
I think another way could be planned versus unplanned purchases. Seems like planned purchases are done through offline means, but the unplanned ones, by unplanned I mean the ones which require quick delivery, is where quick commerce is getting into the picture.
Got it. So Tusha, let me then reframe my question. What I wanted to understand, is there a way in which we can bucket the personas or the people first? Then we'll try to see how we can classify their behaviors.
Okay.
There's Gokul, there's Valari, there's Darshal, there's Akshay, Arvind, Dinesh, Varun, Smriti, Taman, Anita, and Vinita. Is there any way in which we can classify these people?
Hey Deepak, yes, I think we can do maybe tier 2, tier 3.
Sorry, Sandeep, could you repeat that again?
Yes, I was saying maybe depend upon their location, geography, tier 1, tier 2, tier 3 city.
Okay, that's one way of doing it as well. Any other?
Yeah, like one way of doing it can be based on the purchase frequency, the grocery purchase frequency.
Okay, got it. Cool. So let me share how I've looked at it. I know that it was a very short period of time, so it's very unfair for me also to ask how to classify it. It takes some time to go through, synthesize, etc. But I'm going to share with you how I've thought about it, and then you can discuss and debate with me on why and why not. I think the first observation I made after going through these personas was there was a very distinct sort of behavioral differences between couples versus young folks who are staying with parents. That's the first distinction that I saw. And from that reason, I thought I could put all of these young couples together, Anita, Taman, Varun, Smriti, etc. Because here, these individuals, it's largely the family, the husband and wife, in some permutation combination, deciding what to buy, why to buy, when to buy, etc. Contrast that to digital children with analog parents. If you go through their verbatims, what you notice interestingly is the mother plays the primary role of deciding what to eat, why to eat, when to eat, with probably the father playing the role of fulfillment, wherein he goes, does the shopping, probably does negotiation once in a while, or it's the mother does the shopping, etc. The child probably acts as a chief digital officer, for lack of better words, helping sometimes use some digital apps, but otherwise they have their own purchase patterns, which is not necessarily grocery. It skews towards snacking and beverages, which I felt was a very interesting contrasting behavior. And so for those reasons, I thought this could be one interesting way of segregating meta patterns, like patterns which seem universally true for most people belonging to a cohort. Now, within this in itself, no doubts we can further bifurcate, saying geography may have a different nuance, which we'll actually see in one of these examples. Your occupation could play a role, etc. But for the sake of simplicity right now, this is the example. This is what I thought could be a good way of creating distinct buckets and then trying to understand what are answers given to triggers of purchase, frequency of purchase, place of purchase, reasons to purchase from a particular place, etc. And just capture the essence, not the entire verbatim, but the key words that classify their behaviors. Right? I'll take a pause here. Any questions on this classification? Are you able to see this distinction as you now go through the notes that you have, or do you see something very different?
Hi, I'm I'm Akshay. I wanted to ask,
Yeah.
if there is a marketing activity to do, is that so that marketing does, and marketing breaks customers up into segments, and there could be 10 such segments, each with names and specific uh, behaviors.
It is true that marketing does, but it also does not mean product does not do. So usually what happens is in large companies, you have some sense of an ICP, ideal customer persona, which becomes as a default to get a sense of who is this customer and why they think. However, sometimes when you have to rethink a problem grounds up, there is no harm in trying to redefine personas and see, does it match with what you already know, or are you seeing divergences? Reason being, customer behavior and personas change over a period of time, more so in consumer business than any other. With enterprise SMB, very unlikely that customer behaviors change drastically, but with consumers, it does. So there is no harm in a product team trying to redefine and cross and say, okay, does this fit into existing persona patterns? If yes, great. If it's not, the reason for us is, okay, this is what we thought customers used to behave as in terms of classification. I'm now seeing something very different. Either we've got a sampling error or a sampling bias, which means I've spoken to the wrong set of customers, good reason to revisit your study, or initial study may not have been in the right direction and something has changed. It does then require a healthy discussion because, see, ultimately, be it marketing or product team, our job is to interface with the customer. So I don't personally like to say this is person A's job and this is person B's job. What is the job necessary to do it well? Get it done, and have an open discussion with the originators and say that, hey, this is what we've observed. It seems to conflict with what you're seeing. And I've done it in such a way that there is reasonable statistical significance. Why is this conflicting with what we originally know? Is there a massive shift happening? Would you like for us to relook at this data? So these are healthy conversations to have. So TLDR, yes, in some companies, it's only marketing's job, but my ideology is product folks are also consumer teams, and therefore there is nothing wrong in doing this activity. And it so may happen that this could be a subset or it could be a superset of who you're focusing on. So not a reason not to do this.
Yeah, great. Thanks.
Cool. If there are no more questions, what I'll do is I'm actually going to start sharing observations. What I'd like now for you to do is to have a look at these classifications. What are the triggers for purchase, the frequency for purchase, the quantity for purchase is something that I have interpreted. So take it as an assumption that I'm making for the sake of this case study. It will help us with decision making, but it will nonetheless push you in the right direction. The place of purchase is as is verbatim, and the factors which influence are also as is verbatim. So for a moment, spend some time looking at this young couple's grocery, snacks, and drinks behavior, and tell me what is it that you're observing. What are some interesting things that are standing out? Anything interesting? Or is it all looking the same?
Hey, this is Bala.
Yeah.
I see a frequency of purchases like weekly among all these young couples, and quantity of purchases high. It's a common pattern for all these young couples.
Beautiful. Okay. Yes, there's a lot of weekly purchases happening. Interesting observation. What else is happening here?
I think the basket would be more skewed towards cooking items and not to other items, let's say healthcare or personal care.
So
Towards
that's a selection bias in this. Like I said, we're specifically looking at only grocery buying behavior, and under grocery, there's a mixture of both fruits, vegetables, staples, as well as beverages and snacks. That's a universe. So we are not going to therefore see any information regarding how people buy beauty and personal care, household, like stuff to wash the floor, clean the tables, etc. So that information is not going to be there. So let's not worry about that. The context is only fruits, vegetables, rice, dal, staples, etc., beverages and snacks. in that universe, this is what people are doing. With that context, what are you seeing as patterns?
Yeah, again, but one more I see is freshness and convenience is I see the factors which influence place of purchase more frequent among these people.
Got it. Beautiful. Okay, we're seeing freshness and convenience emerging as an interesting play.
Most of it appears to be planned purchases as well. Just 2 of them have called out urgency.
Got it. A lot of planned purchases, only a few are unplanned and few are urgent in nature.
Also, the frequency might be high due to the perishable items. If there were no perishable items, then frequency would have been maybe lesser monthly.
Possible. Definitely, that's one way of looking at it. Though there is, at least in this cohort, we can see that staples are being purchased monthly, but perishables are being purchased twice a week. So yes, perishables definitely seem to have a higher frequency of purchase than staples. Any other observation? I'll take one last observation and I'll share.
Since the focus is too much on the
Sorry, go on, Prabhat.
Yeah, so since the focus is too much on the convenience, so I can see the place of the purchase is most likely the quick commerce rather than the hypermarket. So probably they want everything at their doorsteps. So yeah, so quick commerce place is one thing I can see.
Got it. Awesome. Let me share what I observed. The first thing that caught my attention is, look at Anita as a persona. Is she not the definition of your best customer that's possible for BlinkIt? Would you agree, disagree? Someone who literally buys groceries every single day because the value proposition is, or at least her interpretation is, fresh produce every day and it's super convenient. Is this not the most ideal behavior you would like? Because if you're buying fresh produce every day, a typical recipe or set of dishes that you make, you would probably need to be at least 5 to 6 items, which drastically increases your average order value or the number of items that you purchase. Is this not like the epitome of great customer behavior that we would like most of our customers to replicate?
So I just have a point of view here. I mean, we don't know whether, if everybody has a specific amount or quantity of stuff that they can consume in a week, right? So how are we sure whether a daily purchase is equivalent to breaking the same amount into 7 installments of ordering versus just ordering once with the same quantity? In that case, eventually for a week, the average order value remains the same. It's just that the order has been divided into like multiple orders without increasing overall AOV.
Which is, see, if our goal is to increase average order value, right, or we want to increase the number of items in this case, what you're also doing is you're increasing frequency along the way, right? So rather than buying one big bulk purchase for, let's say, for 2 weeks, you're encouraging the customer to split it over, say, 4 to 5 purchases. And you are probably saying that in a month or in 2 weeks, I would probably buy 20, 30 items, but now I'm going to split it as 5, 6 different items. And the reason I would like to do that is because you can sell the story of freshness. See, let's say that the major use cases for daily cooking are your vegetables and fruits, right? What if the story that is now being sold is on the letter saying that you don't have to now worry about storing the food in your home and making sure that it remains fresh? I will ensure every morning fresh produce.
Firebase खोलना होगा.
Ritik, if you don't mind, can you please mute yourself?
मैसेजिंग में जाना.
Sorry, Tusha, I hope I'll just close out on the point. What I was trying to say is, we know that people cook on a daily basis, correct? To cook on a daily basis, you can either buy daily, or you could buy once in 2 days, or you could buy once in 5 days. or you could buy once in 7 days, or you could buy once in 14 days. Now, what are the factors that influence purchasing frequently versus infrequently? Perishables specifically boil down to the factor that can it be stored? Refrigerators were one of those kind of devices which allowed us to prolong the storage, right? So if you buy a vegetable, you can store it longer. But now with the fact that people are probably building a mindset saying that why even refrigerate when I can buy fresh produce and somebody is giving me a fresh carrot every morning, fresh cucumbers every morning, fresh tomatoes every morning, or maybe once in 2 days, it doesn't have to be daily. Does that not shift the behavior of high frequency consumption? It changes you from being a weekly consumer to a daily consumer or a bi-weekly or a once in 2 days consumer. It increases your average ticket size. Is that not a possible behavior change that we can try to push for?
Yes, I agree. Like increasing frequency actually helps people come back on the platform every time. It's just that we also will need to make sure that that frequency increase is also adding on to average order value increase.
So yes, see, one of the first points, Trisha, that you made was also the fact that the customer has a finite share of wallet, correct? I'm not going to, because you exist, I'm not going to suddenly spend 4,000 rupees on groceries instead of my regular 2,000 rupees.
Right.
My regular 2,000 rupees is spread across multiple channels. Today, Anita happens to be the person who spreads her entire 2,000 rupees on Instamart. However, if you take, say, a Taman, Smriti, Varun, etc., it's possible that they choose certain use cases. For example, Taman says, I choose to go for perishables to Instamart and Swiggy, whereas staples, I choose to go to a DMart. However, a Smriti still prefers to go to maybe an Amazon for a mixture. It could be 50-50 between Instamart and Amazon, right? Whereas you look at someone like a Dinesh, he prefers to still go to the Kirana store for his regular vegetable, fruit produce, and perishable consumption. And only for urgency does he come to Zepto or an Instamart. But what is the opportunity here? They are getting to understand quality. Even though, let's say, BlinkIt positions itself as the last minute app, there is a bunch of people who are probably building salience to say that not only is it last minute, but they also happen to produce really good high quality produce that I can consume. Why then can I not change my behavior? For example, previously, I had to buy 2 weeks worth of vegetable and I'm now fixed on what I can eat for that entire week. What is one of the things that we have learned by looking at a company like, say, Zomato or Swiggy? We have learned the behavior of impulsively deciding, today I want to eat something tasty and different. Otherwise, we have always been people who were eating the same set of things every single day, set plans, set routines, Monday X, Tuesday Y. But suddenly, Zomato and Swiggy says, I give you the freedom to eat anything that you like. Does that mental model not get somehow transferred into this new world with grocery as well, wherein I can now decide today, I buy vegetables because I want to eat Chinese and I want to get the ingredients for Chinese food today. Tomorrow, I was bored with Chinese, so I feel like eating a little bit of Indian. Previously, I had to sit and think, do I want to eat Chinese today on Monday? Do I want to eat that? So I have to come up with some common abstraction, and therefore I have to make peace with that. And if I don't like it, I've already made that sunk cost investment. So I don't have a choice. I have to consume it. Does this not change the order of magnitude of freedom that a consumer could have? And Anita being like the ideal definition of customer who has figured out what true freedom of grocery consumption could look like.
Got it. Got it. Makes sense.
So Anita here is a representation. She is probably an outlier or a 1% customer, but it gives us the hope that there is someone who's figured out what an ideal or a great lifestyle could look like. If you think about it, what a Swiggy or an Instamart or a Zomato does, these are lifestyle companies. They're trying to make our lives magical. Before Swiggy, before Zomato, none of us knew that we could press a button and get the tastiest food that we want, a press of a button. Now we can. If that shift has happened, can that shift not happen for the rest of the cohorts? The question is, how do we make it happen? Now, that's a harder question to answer. But it does give us hope because we have seen a parallel and we are seeing that behavior being exhibited by a small cohort. And therefore, the question to us as a business team is this an opportunity you're looking at? Does this change the narrative of AOV in the first place? So that's one interesting observation that I made here. The second is, now we have Vinita, Arvind, Darshil, Gokul. Pausing here as well. what observations can we make looking at this group? This is the digital children, analog parents group. Anything interesting that we're observing here?
What I can say is quality check and price negotiation is a constant thing that they're getting from their parents maybe, or being double sure on before getting anything.
Beautiful observation. What else? What else can we see here?
I would say not the convenience at high price.
Beautiful observation. Yes, this cohort represented by, while Vinita, Arvind, Darshal and Gokul are the primary protagonists, they're actually representing their parents as well. So it's a collective family's behavior looking. And you're right, they value price, trust over convenience. Anything else that we're observing here?
Hey, I can see Vinita and Gokul, like their trigger for purchase is snacking, which when need arises. Maybe these two folks, every day their need would be there because like they want to snack something on a daily basis. So
Beautiful
maybe
observation. Beautiful observation. Snacking seems to be a very interesting dichotomy, wherein if you actually go through the notes of the verbatims of these customers, you'll notice that the parents' buying behavior for the main food items, which is vegetables, fruits, dal, rotis, staples, etc., leans towards your kirana stores, local stores, offline stores, etc. Whereas the digital children, for the snacking behavior, have the freedom to choose, and they say, I would go to an Instamart to get, a cake or a cookie whenever I want, or I'm going to get a packet of chips because I'm just that modern age digital kid who's not going to put the effort. So within the family, you're seeing this incredible dichotomy where kids value convenience and low ticket sizes, specifically for snacking as a category, whereas parents for staples and food items, etc., they are tuned to their traditional way of thinking. So that's a very interesting dichotomy. So great observation, Bala. Now comes a very interesting set of questions for us. We now have identified why there is low number of items per order and low average items price of selling items, right? One is the fundamental positioning in itself makes BlinkIt be skewed towards urgency and top-up use cases and also activities like snacking, which is driven by impulse. But also for other categories, there's gap in selection, price, trusting, etc. Now, given this information, there's another perspective that I now want to add to this, which comes in from my work in retail, is impulse purchasing is actually one of the biggest drivers of revenue. And this is offline data, but we have now started seeing this in online. I've specifically been driving such behavior at, say, companies like Myntra as well, where people don't buy rationally, people buy irrationally because of certain reasons. The manifestation that you would be familiar is whenever you go to a retail store, especially a supermarket, you will always see chocolates, candies, and other really delicious items stacked up right before heading out. And that helps in increasing your order values. You also see this manifest in terms of how, say, stores design their merchandising and layout. Ultimately, any product, be it physical or digital, if you make it look attractive, people get tempted to buy. It works for certain categories incredibly well over others. So this is another insight I want you to keep in mind while looking at all these data sets. The question, therefore, I have for you folks is, now that you have this information, so previously we had seen very, very early on when we were just purely looking at numbers, that AOV seemed to be this rather incredibly stubborn metric, cannot be more than 15, 20 percentage points over a course of, let's say, 2 years, and orders seem to be. Now we're seeing this very interesting set of data sets as well. With this new light of information, what do you think we should do? So to make it easier, I'm going to present this screen. This is how the state of affairs look. If you were to abstract all of these insights and build it as a market scape, in your current scape of play, Instamart, Zepto, BlinkIt, and therefore BlinkIt us as a company, we shine very strongly in the urgent need category. I don't think that can be disputed. What's also interesting is when it comes to snacking as a behavior with a certain cohort, especially the young digital children, analog parents, as well as your digital couples, snacking is emerging as a very strong trigger for Instamart and Zepto. So it's not the fact that it's convenience. Convenience given along with this particular category is a power couple, right? Over and above that, there are other areas, strategic focus areas in the market, right? You have your staples, which is being dominated by your big basket, Amazon, FK groceries. And then in the offline world, it's being dominated by supermarkets, DMart, department stores, etc. And then there's this perishables place where Instamart, Zepto, BlinkIt is making somewhat of a presence, but it's still heavily dominated by your local fruit stores and vegetable stores. With this lens, what choices will you make?
Like maybe first would be with the marketing or the communication, right? So we just don't want to position ourselves as the last minute need app. Maybe try to showcase how we have other staple items also, which you are purchasing from other platforms and you're getting it within 10 minutes, these items also. So how can we communicate that value?
So before we get into specifics, is there any broad call? So let me try to rephrase this. I'll add one more data set, which will probably help you think through this problem statement a bit more. This is DMart's 2024's annual report. And here you can see a set of revenue distribution by various categories. And DMart is by far India's largest retailer, in probably on par with Flipkart at this point of time. And if you notice, food as a category is contributing about 57%. And we talk about food, we talk about groceries, we talk about dairies, staples, snack, frozen products, etc. And then they have your non-food category, which is about 20%. And then you have your general merchandise. So your bath and bed, toys, games, crockery, plastic goods, footwear, appliances, etc. at 22%. Now, with this information, with this lay of the land, what should be our strategic priorities? I'm not even going to ask the feature level, we'll come to that. As a business, what is the call that we should take? Where should we focus? What is the opportunity we can chase with this new insight?
We should try to target
perishables and staples because we are trying to increase the average order value, which acts on the number of items per order and the unit per.
Got it. Got it. Any other perspectives?
Same, like targeting the food items more.
Got it. Cool. So I'll share my perspective. If I were to build the strategy stack for improving AOV, the three areas I would choose to focus on is one, how do we amplify impulse-driven purchases? Second, how do we shape consumer behavior towards ordering perishables? I mean, the vision should be daily, but in that direction. So it can start by going into weekly to twice weekly to eventually daily. And to support that, how may we change the perception? Now, some of you may ask, why aren't you choosing to focus on staples? Any guesses on why I would choose not to currently focus on staples? Or a counter question, why choose staples? What is the strategic advantage of going after perishables? What is the strategic advantage of going after non-perishables such as staples? Let's take a look at the constituents of this ecosystem and then ask ourselves why and why not.
There's a gap in the market in perishables, which is not there in staples, because staples there are a lot of
other players, bigger players?
Even in the perishables market, there are big players. Even the Flipkarts and the big baskets of the world. I mean, maybe I didn't put it there, but they also operate in the world of perishables as well. It's just that our position in this market is weak. It's not the best, right? Hence, I've highlighted as yellow. But it's a well-thriving market. People are having good substitutes elsewhere. Why is it an opportunity? And why is it an opportunity worth for us to chase?
Hey, Bala here.
Yeah.
For staples, usually people buy like monthly or like, let's say, duration between the purchases will be high and the value of purchase will be high. For snacking and other things, perishable, usually like the duration between the purchase is very low, like weekly or daily kind of thing. So, and it will be very much low value, like few hundreds. Whereas staple purchase will be like in few thousands, like 3,000, 4,000 kind of things.
But is that not good for us though, if we go down that path?
No, so to increase average order value, like for monthly, a set of segments, there will be set of segments who will be ordering the monthly, right? Like where we can focus those segments of users for those things.
Got it. Is there anything else we should be considering? So we have seen the business lens. We know why going after anything which gives us more ticket sizes, more items per order is valuable. We also see the gaps in the market where consumers are leaning towards more and less. Is there anything else we should be factoring in thinking about when thinking about a strategic focus area to pick? And how does it add to our strengths or plays to our weakness?
I think the existing customer behavior, right? So in the perishable segment, see, we already have made some inroads. So it's easier to concentrate there, and it can build the habit, right? Since the frequency is higher, we have that building habit where users retention and the engagement would be higher, and simultaneously it would increase the discoverability also. Let's say you are purchasing for the perishables, but there are high chances that you will order staples by discovering them along with it.
Fair point. Absolutely. That's beautiful. In the sense that you can, because your audience is captive, you can essentially do a lot of discovery activities to help them move towards perishable staples. But if I was to ask the hard question, what is our strengths and weaknesses with respect to perishables, and what's our strengths and weaknesses with respect to staples? How would we answer that question? Snacking is fairly straightforward. Urgent needs is fairly straightforward. We're already doing a great job and winning that. But it has got us a foot in the door, but it's not allowing us to capture the larger pie. And one limitation in itself we know is our positioning. So let's assume for a moment we'll solve that as well. But if we have to move into the world of higher items per order and think about perishables and staples, what else should we be considering given the nature of our business, which can influence our decision on perishables versus staples or perishables and staples?
With the supply chain, we have like quick commerce, we have the smaller dark stores, right? But if I want to stock the staples and these items, might be I have to increase the dark rooms, like dark store size, and also the supply chain cost will increase. That might be the
Beautiful point. So yes, if you look at it, we operate in the ecosystem of quick commerce, and the first principles of quick commerce is small to medium-sized stores in no more than 2-kilometer radius from delivery zones. And because of the high retail costs, most quick commerce stores have what I would call as low to medium breadth and likewise low to medium inventory sizes. Therefore, if you were to just consider dark store as a constraining factor, you will not be able to effectively store 10 kilo atta, 5 kilo atta, and all of these large staples, which may require a lot more real estate. That's one. Is there any other factor apart from the constraint of space, which can affect any of those?
Like for perishables, you might need cold storage facilities.
Correct. So perishables need cold storage,
which requires bigger stores, like you just now mentioned. For staples, Like for it doesn't require cold storage, like smaller space is fine.
For staples, there's a standard price and you cannot charge a premium for it. But for fruits and vegetables, I think you can charge premium for more freshness and more high quality products.
Fantastic point. That is a secret sauce to making money in the world of quick commerce. I think you remember it rather well. It was one of the first points that I made during the opening talk. Perishables, in terms of MRP, only packaged goods in India can have an MRP. Any other product which is sold loosely, such as vegetables, fruits, etc., and to an extent even rice, dal, etc., commodity items don't have an MRP attached. So there is, but if that were to be true, staples would also work in terms of loose goods. Perishables will also work. So how do we then again navigate between this? So MRP and therefore margins is definitely one angle to look at. Warehouse capacity is definitely one angle to look at. Anything else that we should be thinking about?
Also, I guess the delivery would be a problem in the staple section because large quantities and so they would need bigger vehicles to deliver. Right now, I guess mostly bikes are used for the delivery of smaller items.
Fantastic point. So yes, we are constrained by the last mile. How do we get the product from the warehouse or the dark store to the customer? And usually, if you notice, a lot of companies, or at least Instamart definitely does it, they put a constraint on the upper number of items that can be carried as well as the weight. And we also see that most delivery agents are very unhappy carrying such heavyweight items. So inherently, there are certain natural order of limitations that come in because of it being quick commerce in terms of the warehousing capability or the dark store capability, as well as the person who's doing the delivery. Most of this work is outsourced. So when we go do it, we do the heavy lifting. Or when you go through a big basket, you have those little Tata Ace vehicles that bring it. So that changes the dynamic. So these are very, very minor but powerful nuances that change the way in which you make strategic choices. So for all of these reasons, my preference, if I was to take a strategic bet, would be to focus on improving our win rate in the order perishable category. The reason for that conviction is we're already seeing some of our customers exhibiting very strong behavior. The audience that also we can win more effectively is the digital couples. While we can treat the digital children, old parents as a second order persona, there's a fairly large enough market and growing market of the digital couples in itself. So just focusing and winning that market in itself can win. This audience also is the audience that cares about variety and flexibility of food, further enhanced or amplified by their Zomato/Swiggy eating behavior. So that adjacency makes it easier to sell the story to them, saying that if you can think about eating different types of food every day, why not as well bring that magic to your everyday food? And that then becomes a guiding principle to say that eventually one fine day, every day you can decide what to eat and you get the fresh produce, but we will take you into that journey. Over and above that, we know for a fact that people make a lot of impulse purchases. There is evidence behind it, and we can see that behavior manifest in the second persona that we have, which is the digital children, old parent category. The digital children definitely do a lot of binge eating. You see this in the form of Netflix and chill. You see this in the form of friends coming over, or you're just bored at home and you're like, "Chalo, let me order a packet of chicks because I'm very lazy." That is a significant portion. That seems to be a very strong resonance point. What else can we do to amplify it? And lastly, one of you had mentioned that ultimately to win the perishables category or any mind shift, because we are currently positioned as a last minute app, we haven't made the mind map connection to say that we can also be your everyday grocery guy, right? So that requires a change in perception. Given this, how do we think of solutions? So let's go, before we go there, usually an order of activity that I like to do is to identify the key stakeholders involved so that you bring in the right set of people to have conversations. That said, if we have to create solutions which help in driving impulse purchases, how would we go about doing that? blue sky thinking. What are the crazy ideas that you have? How would you structure this problem? What are the ways in which you can break down this problem statement in order for us to drive impulse purchase? Keep in mind as a mental model that when you typically check out at your traditional retail store, you see chocolates at the checkout counter. The equivalent of it is, let's say you go to an Instamart, before checking out, they say, hey, would you like to buy XYZ item? What else can we do over and above that to drive impulse purchase? These are unplanned purchases. It happens because I see a product, I'm like, oh, I want to buy this. Given that mindset and mind frame, what are products that you can build towards it? What drives these behaviors?
I would say like the existing feature only, right? But notifications at the right time, let's say snack times or evening or right after the dinner. You can have notifications and the related items which are mostly bought during that time. Maybe let's say 4 o'clock it's snack, but at 10 p.m. maybe ice creams or the sweets.
Beautiful. All right. We have impulse driving notifications. What else? So before we get into specific solutions, is there a way to which we can structure the solution space in itself so that we can generate ideas basis those themes, for lack of better words? Like, is there a way in which we can break down the solution space so that there's some organic way of thinking about ideas? Otherwise, there could be 3 different set of ideas and there will be no way to connect them back to the core theme. How do we sell this as a narrative? How do you show this is a structured way of thinking about solutions? What are the various ways in which you can break down this problem statement? And therefore, one of the ideas for that could be time-based notifications to sell impulse.
We can have some ad campaigns or something like as a bigger category, and then inside that we'll, let's say, some cricket World Cup is going on. So based on that World Cup, all our ad campaigns will just go towards buying products which are related to World Cup or something of that sort. So ad as a big
idea. Is there a better way to structure this? Like, first, give me the components. Like, what are the building blocks when we think about this solution space?
Maybe we need to look at the user personas, like the young couples, which we have seen earlier. Maybe we can relate their behavior. What are their needs? So, like based on that, we can think of the creative solutions based on their user behavior for the different kind of personas.
Okay.
Hi, Makshay. We could say that what could be our estimate of the take rate, and hence what would be the likely impact on the AOV. That is a way to probably structure this thought and then put ideas in that list.
That is prematurely putting impact before solutions, right?
Yeah, agree.
No restrictions.
Agree.
Like, if you were to think about every possible idea under the sun that can be used to drive an impulse purchase, how would you go about even saying, okay, these are the 3 ways in which you can think about impulse, or these are the components that I have to build and keep going deeper and deeper into it so that I can build an impulse driving platform?
Hello. Hey, maybe different target customers on different categories of product.
That will be a targeting capability, which anyway a platform like BlinkIt would have. But in order to drive impulse, like, what is impulse in the first place?
If we maybe look at the customer journey and figure out where exactly the trigger points could be placed, that could be an approach.
Okay, that's an interesting point. Where in the customer journey to be placed them? So position of an impulse driver. What else?
So we can focus on discovery and personalization of the products, right?
Yes.
Any particular person, like what kind of brand he might use, right?
So all of those
and
are
also like discovery, right?
See, we're now entering into the product thinking space. Like, we're trying to think of the structural solves, like the features, the capabilities that we need to build, and to brainstorm on that. What are the, like, how do we break down this thinking? Okay, maybe what I'll do is I'll try to show what I mean by that to give an illustration. So if you think about, look back at your traditional retail, you go to a checkout store. What makes a customer want to pick up that chocolate before they check out? One is obviously the placement, as Arnika said. There is also the visual, right? If it was not visually present and it was not presenting in an appealing fashion, I would not want to pick that. For example, if the chocolate looked ugly, right, or it looked damaged, even though it was in that position, would we still pick it up? So would it be fair to say then the imagery or the visual representation is one of the key drivers of an impulse or a desire to purchase an object?
Yeah, it's fair to say.
Right. Second, would it be fair to say that triggers, internal triggers, emotions, or social factors can influence us to buy these things? For example, I think one of you had mentioned about, say, a cricket match. That's a great reason. I'm celebrating with my friends. I have a reason to buy, and I'm looking suddenly for chips, and I'd love to buy it. So, are there internal reasons that can make us buy? Over and above that, is there language that can convince us to buy? So, this is how I think about impulse drivers in terms of the structural components that go into thinking behind it. And each of this in themselves could have a wide variety of solves. For example, how can we go about creating visuals, right? My creative team can come up with images. You have today generative AI, they can create images. What type of images? That is another line of thinking that you can behind. Do you want to put celebrity-led images? Do you want to put influencer-led images? Or do you just want to do product photo shoots? What kind of images? Or does videos work? For example, we know that anytime we see this incredible video of, say, beautiful looking food or tasty food, we naturally get the pang for trying it out. How do we make videos for certain categories such as, say, chocolates or cakes or beverages, which make it so enticing that I'm like, no, I have to buy this? Are you able to now see how to think about structuring a solution space? So one is we can come up with ideas on the fly, but the other is to put a framework or a structure of sort which allows us to say what are the components of it, and basis which we can go deeper and deeper into rabbit hole. So now that you know that video representation of format, the next question that you can ask is, okay, what kind of videos? You could say celebrity-led, non-celebrity-led. Okay, say what kind of celebrities? A-class celebrities, B-class celebrities, C-class celebrities, influencers. What kind of influencers? Sports influencers, fashion influencers. This helps you to build a very exhaustive range of permutation combination of ideas. And then you can mix match all of these together to create your final set of product ideas. Yes, Vishal.
Isn't product and price also one of the impulse? Because I don't think there are all kind of products which can be bought on impulse. For example, a PlayStation or anything like that. And again, I think low value products are can be bought at impulse, but high valued products are generally not valued or not bought in impulse.
Fantastic point, which is why I've written the heading as product solution space and not category solution space. Because to solve this problem, if you recall, one of the first things that, we had written was, in order to solve this problem, product teams need to collaborate with category teams and marketing teams to solve this. So category teams will give you input, and you can also give them input as to what you think are the right set of categories to solve. But then given a category, pick any category. You take candies, you take chocolates, you still need a common solve that works across the categories where impulse works. What are the product solves for that? That is the product solution space we're looking at. So this is an exercise that I typically ask all my product teams to do, because usually when we go down the path of freewheeling, which is to say, sit in a room and come up with ideas, coming up with ideas on the fly is usually very difficult. And more often than not, they can end up being scattered. And it becomes very difficult to cohesively connect and tell a story as to how they work together. Ultimately, the goal of building good products is also to have cohesiveness in the products. And it's just not a case of saying, I have 3 different ideas. How do these 3 ideas come together? Are they 3 disjoint ideas? Are they 3 connected ideas? Can 3 plus 3 become 6, or 3 times 3 become 9, or 3 plus 3 becomes actually 0 because there's no connectivity between them? So the essence of also doing good solution-based thinking is also having some kind of a structure which allows you to identify common capabilities as well as themes and tracks basis which you can go deeper and further. For example, in the case of triggers, there are many emotions that you can tap into to think of when and how to send notifications. So you can say that triggers is one, the placement is going to be a notification, the logic is going to be based on time, and therefore I'm going to identify when is the customer going to come home, when is the customer stuck in traffic, when has the customer probably got period pains going on, when are they chilling out with their friends, how do I collect that intelligence? Now there's a track through which you can think a little more structured about how to come up with the various kind of emotions. Otherwise, it's a good chance that you may come up with this idea, but there's also a very high likelihood that you may not come up with the idea at all, simply because you're just going in a very haphazard manner for idea creation. So now that I've shown you how we do it for impulse drivers, how about we try it for the next product stack? Which is, if you want to build the product stack for solving for perishables, how do you structure this problem statement? What are the various components of solutions that you can go down? What are the essential building blocks in order to solve for perishables?
Like talking about their health benefits or something like that.
Okay, all right.
Freshness in produce. Freshness.
Okay, all right. Is there a way in which we can connect all of these themes together? Could we call them as trust markers? In order for me to trust you to buy all of these perishables, freshness, organic, came 5 hours ago, consumed by 15 people, can we call collectively all of these as trust markers?
Yeah.
All right, so we have trust as a pillar to solve for. What else do we need? Any other thoughts? What else could be the building
Best
blocks?
price, maybe.
Price, yes, but price as a construct already exists as a platform capability. Is that going to be anything different that you're going to do for perishables? Think about, put yourself in the shoes of the customers. You're opening the app, you want to buy, say, cauliflowers, or you want to buy tomatoes, or you want to buy probably cucumbers. Go through that journey, and as someone who's, think of yourself as someone who has only done top-ups till date, which means you've only bought paneer on an emergency basis, or that one tomato when you really had to buy tomatoes. How are you going to take this person on a journey from buying one tomato to buying their entire daily groceries list, or at least once a week grocery on your platform? Like, how do you bridge that gap? What kind of problems do we need to solve along the way?
Perishable, like something like seasonal things that come up, seasonal like fruits and vegetables.
Yes, that's an interesting point. How do we say that there are new produce on our platform and therefore reasons to consider to purchase? At least it creates cognizance to say that we're just not a tomato and onion. We have also tomatoes, sorry, we have mangoes and coconuts, which are fresh, new season. So that could possibly help expand the thinking line. Possible, yes. What else?
A proper recommendation system, maybe like users who bought this have bought these, or communication system that says that talks about the seasonal produce, like somebody has said.
Right. So we need to build awareness. So awareness is then a good pillar. Now, how do you build about awareness is the next set of detailing. But yes, customers need to come to be aware of the positioning of perishables, the fact that it's no longer just a quick commerce app, but your everyday or every week's convenient, value priced or fresh supply chain based uh, produce available in the app. So how do you communicate that? And therefore awareness becomes a problem statement or a track to solve for. What else do we need? We're looking at the entire product stack. So our world is not just limited to the app. Think ecosystem.
Inventory availability.
Yeah, we probably need to look into our inventory management systems as well to see how well they are fine-tuned. Maybe for the current volumes that we operate at, it's fine, but maybe if we have to go full-blown into perishables, we need to really think about our supply chain and the tech stack that manages or the product stack that manages. Like, how do we predict demand? How do we know perishables are going to get destroyed? How do you use technology to solve for quality checks? Now, think about it for a moment that people go to the offline store to buy vegetables, and the only reason they go is they want to be sure that the tomato they buy is actually real or fresh or it's high quality. How do they do it? They take it in their hand, they touch it, etc. But in the digital world, the day it lands up in your hand is when you know that it's good or bad. But if a false positive happens, I order and the tomato comes rotten, my trust is going to break immediately into it. So what kind of product source do I need at the source side of things to ensure that that promise of high quality produce, fresh produce is actually delivered? Because again, we are a margin thin company. And if we're going to keep throwing people at the problem, the margins are only going to decrease. So then how do you use technology to think about it? It may not be necessary that we solve it today, but at least we have a line of thinking to say that, yes, these are problems that we should solve. And then the question is, when do we solve them? So from that lens, there's a wide range. I just put a few. And I'd like for you, therefore, to think over a few more ideas in this, right? So how do you build awareness for perishables? And therefore, there are things that you can do within the app. There are things that you can do off the app in terms of email, SMS, push notifications. There are trust markers. How do you tell it's fresh? How do you show it's organic? If you want to tell the story of fresh, what is the best visual way of representing? Is it through text? Is it through images? Do you have live streaming video that shows what fresh looks like? If it's inventory, what are the various inventory management models specifically required for perishables? Does our inventory management model support that? How can we forecast demand so that we have sold the story that we need to sell tomatoes, onions, and you can buy it on a daily basis, but we don't have a good enough means so that we can procure the right volume and keep it at each of our distribution nodes so that people can buy it on a daily, weekly basis. Otherwise, I open up the app and realize that there's just not enough inventory depth or inventory breadth. And I still then classify saying you may have perishables, but you're still best only for top ups and not for weekly purchases. So, how do you then build good demand prediction engines? Lastly, order convenience. What does the entire end-to-end order journey look like? What does it look for a new user? What does it look for a repeat user? For someone who has made a purchase, how do you make it easier for them to come back? Is there any way in which you can preemptively think of what a typical Indian family needs and make create this so that you don't have to think? It could be a good story to sell saying that now don't think about groceries. If a typical family needs ABC item, XYZ, press this. Again, you're just going crazy with ideas on what can be. You'll at some point want to come back, double down and say, okay, which of this is feasible, realistic, achievable? What is the impact on it? But at some level, you want to take a step back and put some structural thinking to say, what are the various components and how deep can I go into each of this? Now, with this, as a team, what else can you go deeper into? Like, take, for example, trust markers. And if you had to convince people about how through product can I tell them that it is organic in nature, what are the various ways in which we can do that? How do we go about telling this story? How do we tell our customers that the produce on our platform is organic over above the fact that I simply write the word organic? Is there a better way of selling the story?
In the form of the visuals, short videos that how do we like source from the farmers and then how it is then logistically transported to your house. that entire process, maybe in form of short videos, can help user to understand that.
Okay.
Build trust.
All right. Visual representation. Let me ask a slightly different question. How does a customer understand what is organic and not organic? What are they actually looking for when they say, I want to buy organic produce? What is it that they're looking in their food that they're buying?
No pesticide or any chemical has been used.
Right? How do we communicate this to a customer? How do you build trust for this?
Certification from a trusted source which recommends that a so-and-so company offers pest-free products, veggies.
Fantastic. There we go. So now, one way is to have said that it's just organic, but if you want to take it to the next level, you could say, hey, how might I partner with some accreditation agency to say that all our vegetables have been tested and verified to be pesticide free, right? What does the product solve for it? Who do you have to integrate with? How do you represent that information? All of those become the complexities of designing that product. But at least we're thinking of all possible potential ways in which we can solve this problem and not getting trapped into very obvious choices. And if you think about it, more often than not, the default thinking when it comes to solving AOV usually ends up saying, how do we do basket building? If we go to a really rather extreme example, people say throw gamification at it, give order rewards. But we all know that those are good optimizations, but they're not good structural solves which attack the core of the problem. And even if you're trying to attack the core of the problem, how do we have a very methodical way of thinking through ideas so that we can comb the breadth and depth of ideas and then choose which amongst these ideas can be feasible, can be valuable, what is the GTM required for it, what are the dependencies required for it, what are the compliance asks for it, is there any funding requirement for it? There's a whole bunch of jugglery that we need to do, but at least we're starting off with a very open mind on all the possibilities rather than not having a very efficient idea generation machine. So one of the things that I've noticed in the limited time that I've been building products is most teams struggle to come up with good ideas. And as of the biggest challenge is we have availability heuristics to say that we default to the most common ideas that we read in media. Many of you would have read some article on Linny's which says gamification solved for Duolingo. So the most default answer for many of this would be a Duolingo ad. Or we are most accustomed to thinking that ads are a good solution, so we'll default to it. How do you break out of that clutter is the reason why you need to put some kind of a forcing function to say, how do I break down this problem statement called perishables? What are its first principles? And how do I go deep into every single track within it so that I can go past the obvious and start pushing the boundaries towards the non-obvious but elegant, beautiful, impactful solutions. So that's the reason why I was sharing this. Would you like to take a stab at any other pillar in this? Anyone wants to take a stab at, I don't know, maybe awareness or maybe inventory or maybe order convenience, any crazy random idea? Again, our goal is not to be confined at this point of time, but rather to think practically based on human behavior and yet outlandish enough to seem like a game changer.
I'll take a stab at convenience. Under convenience, we can think of some dishes and their recipes where we know what are the ingredients and we can sell specific quantity of specific perishable items.
Okay, all right. Recipes, beautiful. We give people recipes and say, if you're making chana dal today, click this and all the recipe ingredients are added. All right.
Maybe in the awareness, like looking at the healthy trend, right? Maybe at the nutrition value communication. Like
beautiful, fantastic point. You're catching on to a mega trend that's happening. Food farmer has now started saying, label dikhao. India is now going to read labels. So maybe we start saying that for perishables, there's a better way of representing. But the only challenge is perishables are things like tomatoes, cucumbers, onions. Where is the label there? How do we show the nutritional value? Or is it more like the protein, carbs, fat content in it? Is that what you're trying to refer to?
Correct, correct. Like if not at the exact values, but let's say we can say berries, right? The vitamins, or what are the high level nutritional values which those products are preferred for?
Beautiful
Let's say
point.
carrot for vitamin C or something, right? So at those level we can target.
Fantastic. And that also helps in building trust because it shows that you're an authority who understands nutrition value of food, which kind of helps you distinguish yourself from other competitors as well. Because everybody says, I sell tomatoes, but I tell you why tomatoes are good, right? And I'm actually helping you educate yourself in your purchasing decision. Now,
it also helps to like increase the basket size, right? Or not, you're just not buying the day-to-day items, but maybe you'll try other items also.
Possible. I may come for tomatoes and you can say, hey, here are 10 products that can actually help your skin glow.
Correct, yeah.
And then I'll be like, what? I want skin glowing and I don't want to put chemicals on my face. So how about I go for turmeric and a bunch of other things? And you can probably say, hey, these are a bunch of recipes that you can make based on it. And I'll be like, oh, wow, that sounds like a great idea. I really want to get my skin look good. That could be another story to sell to the customer. And that could be a product solve for it. Beautiful. Come on, this is getting great, right? Can you folks see now how putting the structure helps in breaking out of the mold and coming up with some really creative, interesting. Now, I'm not critiquing and saying that this will give impact or not. We're well before that. And what we need right now is the ability to think of new ideas, because the one thing that I do know about consumer products is not so much true for enterprise and maybe a little for SMB, but for consumer products, it's really hard to know what works. And the only thing that has worked consistently well for my team in the past is the ability to come up with a truckload of ideas and build the process and culture for high velocity idea execution to know which of this clicks. Because if you take a look at it, who could have guessed something like a TikTok, or who could have guessed something like a Facebook, or who could have guessed a Swiggy or an Instamart would take off? So given the fundamental premise requires for us to be a little creative, then it does mandate that we have the skill to be very creative and become an idea generation machine, and then build systems and processes which allow us to rapidly test these ideas so that you know which work and which doesn't work. Yes, Bala.
Hey, one question. See, all these like mentioned here, right? Awareness, trust markers. These two apply for other categories as well, like say staples, as well, correct? Like if I have to say trust markers, fresh and organic, like say organic product versus non-organic. In case of say staples such as like tur dals and all.
Yes.
Inventory and order convenience. Why is it has to be specific perishables thing?
Brilliant question. The reason why we're doing this, we first want to ensure that we are thinking breadth and depth for perishables. And then usually what happens in product teams is you take a step back and ask, the very first question that you ask is there a platform capability which is already solving for this, which I can extrapolate and build? Second, if I were to build this specifically for perishables and it's not available, tomorrow, what kind of use cases can I solve to make it forward compatible, right? More importantly, almost often whenever you're building products, you want to build what I call the LCM, the lowest common multiple, so that one product can solve for multiple use cases. So if you're solving for fresh, it's not to say that you cannot extend this to other categories, but you do have a GTM problem and you do have a positioning problem. So you don't want to immediately solve for every category, because the more categories that you try to add, that could be nuances and challenges which prevent you from going to market quickly. So to ensure that your focus is on perishables, you identify specific solves for perishables. If it so extends, you can ask what is the incrementality of adding it to another category. But if you feel that gets in the way of you winning in perishables, the good or the right product call would be to not do it, because you ultimately want to win in perishables before you think of another category.
Okay.
Does that make logical sense?
Yeah.
Awesome. Do you want to take another stab? Is anyone want to take a stab at another idea?
I think daily subscription to the perishable products, so that they don't have to order on a day-to-day basis and fixed quantity of perishables comes at home.
That's a fantastic idea. You can say that on an average, most people consume 2 kilos of tomatoes every 2 days. So set up a tomato subscription pack and it comes to your doorstep every morning, autopilot. Fantastic idea.
Yeah. Also, like, can we communicate about like 100% of our orders are fulfilled so that like it kind of signals them that like whenever I need something, it's always available on the platform, kind of thing.
Would that
Like
not
it comes under inventory. So we are like communicating that availability of items on our platform.
What is the downside of that though? Is it realistically possible to always have 100% availability?
Actually, no, but like once you order, we fulfill 100% of your orders.
But is that not a platform hygiene to say that if you order, we will fulfill? Is that not a hygiene job? Should that even be marketed?
Okay.
It's a good thought. It's a good thought. No doubts about it. But it forms the foundation of this business that if I place an order, I will get it. If that premise in itself is broken, then I think we need to go back to the drawing board to find why we can't fulfill any order that is placed in the first place.
Yeah.
Got it. Awesome. Folks, we're at 3 o'clock. We've actually been doing this for quite a long time. I'm pretty sure we can go deep. Actually, there's one more topic that I wanted to cover. But I'm guessing at this point of time, at 4 hours, most of our brains are stretched to our maximum level. And it's great that a vast majority have still stayed back and are actively part of this conversation. So what I'm going to do is I'm going to call it a day. Unless, of course, you folks want to continue and you want to get into what I wanted to do next was to take one particular feature and probably go a little deep into solutions thinking to say that, okay, take a feature, what are the components of that feature, what are the design questions that you need, what are the engineering questions you want to do. We can either do it, I'll take a poll. If vast majority say yes, we'll do it, we'll continue. If not, I'll probably set up a follow-up session where we probably get into just those kind of specific nuances where we focus on feature definition, because that's where good product craft comes in. This is where we have identified problem structuring, identifying the right problems, figuring out if there is merit to going, thinking about a problem in a very strategic fashion, identifying insights, coming with a solution space. There's a whole ocean that we need to cover, which is to say that once we have identified the solution, how do we prioritize it? Which solution do we pick? And how do we design good, elegant solutions that actually make an impact? So that part would require for you to very actively participate. So I'm leaving it open to you folks. Do you want to do that? If not, I can set up another session shortly after where we focus only on that part of the journey and we can continue this particular case study in itself, or I can come up with a new one specifically to do solutions thinking and high quality product definitions and delivery. So I leave the choice to you. You can let me know how we proceed, given that we're at 3 o'clock.
Request. I'm Akshay. My request would be to stop here, but continue from here in the next session and do it in the same method or in same detail as was done, as is done today.
Sounds good. Okay,
that is my request. Yeah, but we start from here then.
I hope that most folks who attended till here also turn up then, so we can try for that. Done. Sounds good. Okay. Any other?
So I think this is kind of a breakpoint from which a new episode can start without people worrying about what happened in the previous episode. This is a point where we begin. Yeah.
So maybe we can give quick recap kind of thing.
So I'm
even
this
that works
on YouTube as well, so it becomes a ready reference point for those who have attended as well as those who will come for the next session. So you can at least do a quick refresher, and we can start saying, hey, this is the context in which we are restarting this, and here's what we are going to double click on for the next 1 to 2 hours.
And meanwhile, I have one question, right? So
sure.
Once we decided this, like what's the process to create these idea or deciding these building blocks first? And with whom do we work? Let's say we as a PM, right? But who should be our team to brainstorm these ideas?
So usually these ideas, my personal preference is when you brainstorm, you involve all the key stakeholders involved in this problem statement. So with perishables, we recall I listed out the stakeholders. Let me just go back to that slide. You have your category team, you have your product team, you have your marketing team, you have your supply chain team, you have your procurement team. Get everyone into a room give the broad structure, which is to say these are the 3 to 4 pillars upon which perishable as a philosophy operates. Now go deep and ask everyone to contribute. So pick a track, ask the category team to share ideas, ask the product team to share ideas, ask the marketing team to share. That way you get a lot more exhaustive breadth and depth in terms of ideas. Once you complete this exercise, usually the product leader responsible for this track would try to do some kind of evaluation. You can use the RICE methodology. You can come up with your own personal methodology. I don't per se have any particular favorite. Choose one that logically suits the nature of problem being solved and identify what are right bets. Probably the one caveat I would call out is more often than not, most solutions get thought in isolation. I'll try to give you an example of that here. So now, for example, if someone was to do this prioritization exercise for impulse drivers, if you see there are 3 broad sub-themes. You have visuals, you have placement, you have triggers, and then each initiative will be scored against, let's say, reach, impact, confidence, effort, etc. But if you were to do this, something terribly wrong will happen. I want you to have a look at it and tell me what will go wrong if you were to try to prioritize. RICE is an extremely popular framework. It's great, no doubts. But there is one small drawback, and I want you to tell me what drawback you will see if you see the way we are doing prioritization here. What can go wrong?
It is based on our assessment.
Which is true for all prioritization, sadly. It's based on our assessment.
Yeah.
So that bias is always going to be there. So we get better at it. But it's not so much about our assessment as much as how we are thinking about prioritization, a concept, which is where most teams go wrong. And I've purposely made that mistake here. So I want to see if you folks are able to identify what have I done wrong here.
Nope. Can't say.
Okay. So if you look at the sub-themes, you have visuals, you have placements and triggers. If you notice, placement is a capability that powers visuals and triggers. So if you were trying to prioritize, and for some reason, let's say you pick up Gen AI images, or let's say you pick up social proof because it has low effort, high reach, etc., you're missing out on the fact that you need a fundamental platform capability to come up with the right kind of UX and UI and logic specifically to solve for impulse drivers upon which your Gen AI images are being placed, or your videos are being surfaced, or your social proof is being delivered.
Yes.
So it's important that whenever you think about any kind of product solutions, it's also important to identify what are the interdependencies between the features and not look at it at a feature level, because when you look at it at a feature level, you're missing the larger abstraction that connects the dots between them, right? So if you just see it as, oh, it's Gen AI versus video versus position UI, yes, each feature in itself has its pros and cons, but they are not mutually exclusive. They are interdependent because some of these require another capability. So it also then matters what is a foundational capability and what are additives which are added on, which are used to then deliver value. So not having that point of view can result in poor prioritization and wrong feature building, which eventually ends up in you losing time, market, and getting business pressure at the end of the day. So be mindful of how you choose to categorically define your prioritization structure and identify dependencies, especially ones that are platform capabilities. And more importantly than not, sometimes these capabilities may not even come from your team. You may have to depend upon it from another team. For example, it may come through the course of discussion when you're building this product that, hey, why should impulse driver team be the team that comes up with positioning logic? I have a global positioning logic system readily available for other use cases. I will add it to my roadmap. And therefore, you need to have ABC requisites on your side. So which means then your solution space suddenly changes, wherein you're replacing placement and position logic with another set of integration capabilities that you need, and that then becomes the prison. Now, that integration may have zero reach because it's not really a user-facing problem. It's an infrastructure capability. Impact-wise, there's nothing directly you can attach from a dollar point of view. Confidence will be very high. Effort could be very large because the cost of integration with, let's say, legacy systems could be high. You may say, okay, therefore it's not required, but that's a foundational capability required upon which you build your, let's say, your image delivery or your video delivery or any other snippets through which you do social proof or send a push notification, etc. So for those reasons, it's important to not see everything too tactically at a feature level, but try to understand how is it connected to the system and what are the sequence of systems that need to be solved for, and therefore make some of those as your prerequisite and say that, yes, even though they may not have reach, impact, confidence, etc., they are foundational hygiene capabilities, and only after solving those can I actually get my business-oriented problems being solved. So that's the TLDR of the challenges of prioritization if you just do too much of feature level abstraction. And that should also kind of give you a sense of what is the next logical step after coming up with your expansive set of features. This is a very tiny set. In reality, if we spend a reasonable amount of time having gone through all the data, all the customer verbatims, you are highly likely to have at least close to 300 to 400 ideas at any given point of time. That makes it even more difficult for you to sift through and pick your best winning bets. So usually a guiding principle that I give my team is if you're trying to get a metric up by X, you need to have at least 300X ideas available. So my team's default thinking model is give me a problem statement and I have to at least come up with 300 different ideas, because between this and your final impact are a couple of important factors. One, more than 1/3 will fail your RISE effort for a variety of reasons. Another 1/3 will fail because of dependencies, where someone says, sorry, I can't get it done because capabilities don't exist. The final 1/3 is going to break down simply because if you look at the hit rate of consumer products in the market, more than 75% of any feature will fail in the market. This is true for Airbnb, this is true for Google, this is true for Facebook. Even best-in-class companies struggle to have a very high hit rate. At Myntra, our hit rate used to range bound between 25% to 30%, which means 6 out of 10 ideas are inevitably bound to fail. So when you have such a high failure rate, it does become important that you become an idea-generating machine. And that's why it becomes even more important for you to have a structural capability to think very expansively of every permutation combination of idea and every permutation combination of solutions. Therefore, this is why during interviews as well, good product leaders look for abilities of a PM to see how much they can stretch their brain to come up with as many ideas as possible. And if they see that someone can only at best come up with 3 ideas, that's usually not a good sign. So that's kind of like a red flag for us to say that, okay, this person is not being creative enough and not being structural enough to come up with great ideas. So the ability to generate large volume of high quality ideas is usually a good leading indicator of a PM, a leader, and a team highly likely to see success. So just a little bit of summary on how to think about solutions and the stages that follow after this. Cool. I guess, is there any other questions? Happy to take a few more questions before we wrap it up for the day. Alrighty. If there are no more questions, I'm going to stop sharing my screen. Alrighty, folks. This has been a fantastic day. I thought that we would spend about 2 hours, but it turns out that we've spent a little more than 4 hours. So for all of those of you who stayed back till this time, really, really appreciate it. Thank you so much. And means a lot that you have invested your time. And this is really, really fabulous to see that you folks care about your craft, high quality questions, really detailed participations, and some very fantastic thinking that has come through. make sure that you carry forward this into your day-to-day product work as well. There's definitely going to be a lot of pressure at work, which makes it harder. But the more you keep doing this over a period of time, this kind of becomes your muscle memory to become a really good product builder over a period of time and delivering a ton of impact. So thank you for being such stellar product folks. And I'm looking forward to seeing the kind of impact that you folks create in the product world because of this kind of dedication and love you bring to the table. So thank you for making this Saturday incredibly fantastic, first and foremost to yourself. Second, to the world of products that we build, to which we owe ourselves. And it makes me feel proud to feel that I've been able to add some value to you folks and making my Saturday incredibly awesome as well. So thank you so much. Most definitely, I will be putting up the details for the next set of sessions. I will need some time to prepare for it as well. But more often than not, I always put it up on LinkedIn, and you'll get to know this in advance.
I actually meant the next session of this case study.
Yes, that's what I meant.
Yeah. Thanks.
Awesome. And if you don't mind, folks, I will reach out to you at some point asking for feedback as well. Your feedback would mean a lot. I wasn't able to incorporate the feedback slide at the end of today's session, but I'll try to reach out to you on LinkedIn. So please do share your feedback, what worked well, what could be better, what else could we do to make this a lot more engaging. And if there are possibilities where we probably attack this problem statement a little more in advance, so maybe we can give an assignment to ourselves and spend some time trying to solve these problems independently and then come back a week later and also then share our learnings. That could be one interesting way we do it. So I'm trying to think of newer ways in which we could make this effective for all of us. So happy to have your feedback on that and new ideas as well. So with that said, I'm definitely putting this on YouTube. And once I put it up on YouTube, I will share the link with all of you so that you can go back and peacefully go through this again, then rethink. And maybe if you have another doubt or if you have a new point of view, ping me and then we can discuss and debate. That way we both get better as product people along the way. Awesome. Alrighty then. I will then
Thank you very
call it
much
today. And I hope to see you folks soon. Take care.
Thank you so much. Brilliant.
And have a
Thank you so much,
fantastic
Deepak.
Saturday and a lovely, relaxing Sunday.
Thank you.
Thank you.
Thanks a ton.
Ciao. Bye-bye.